Yeah, let me just show you the Redis here. This is awesome because you have Redis 4, and then they have uh, neural net uh, module,
Mm-hmm.
and this is still, I believe, in I'm not sure if it's alpha or beta yet, but this GitHub project, it's I don't know anything about machine learning, but when I saw this, I thought this was really cool. So you can
Mm-hmm.
embed your um, scripting right into the stream of Redis 4. So you launch your Redis server
Mm-hmm.
uh, as so, right. So we'll launch the
Right.
Redis server, but at the same time you can input your whatever your module is. In this case, the neural net. So it's
Mm-hmm.
running, but it's also running with the capability to do all the neural net uh, data manipulation right in memory as the data comes in, and
Wow.
it's very fast.
Mm-hmm.
I was really impressed with it, and they've added some new features, and I think you don't really need to go and look for all these heavy duty um, frameworks like that you were mentioning, like the Kafka and the
Right.
Spark, because this does the same thing. It's
Uh-huh.
in memory and it's very fast.
It does. Cool. Yeah, and Redis is a super fast solution. Yeah, pretty
Yeah,
cool.
I love. I've looked at so many solutions, and I always come back to Redis.
Yeah, right.
You
It's
know?
simple and efficient. Yeah,
Yeah.
that's right.
Have you seen this one project? It's actually done in Java. I discovered this in December, called OpenHFT. Um, it's a pretty cool project. The problem with it is sort of somewhat bloated, and it's HFT.
Mm-hmm.
The problem with it, it's not properly for me. It's not properly documented where I can really understand what it's doing. And the other problem is there's so much to it. These projects, but he's taken away all these features as each upgrade comes out.
Right.
So this would be another good project to look at, but it's just I can't make heads or tails out of it. But it looks good.
Mm-hmm.
So,
And
but
that's Java based, right?
yeah, it's
Yeah.
Java. This guy spent like
Yeah.
6 7 years, and he shows you how to offload all your data handling off of the heap and put it into the L2 cache and really speed up the processing. But over the last
Mm-hmm.
couple of months, I've been looking at C++ with some other. I mean, it's just raw coding. Like there's no framework, but there's a lot of cool
Right.
capabilities that you can do with, let's say, Intel, and then
Mm-hmm.
offload through one of their co-processors, so you could take full
Right.
advantage of the L2 cache. And
Mm-hmm.
it's very like CUDA GPU like performance.
Right. Right.
And the cool thing about it, because it's a multi-threading framework, and really what it's meant for is just that multi-threading. And
I see.
I'm trying to come up with some ideas on how to work with it. But right now, because I'm just going to stick with typical retail, forex retail trading, I don't have to worry about
Mm-hmm.
these sort of speeds to handle. You know, like the fastest I'll go is probably 1 minute, maybe 5 minute time frames. So it's not very.
Yeah.
Yeah, I don't need this stuff
Yeah.
yet.
Exactly. Exactly. And what data feed are you using? Just IB interactive broker.
Well, yeah, eventually, but I'm gonna move. I right now I use IQ feed with I don't know if you see my YouTube channel. I have a YouTube.
I did not yet, but I think I received one of your emails where you're reviewing IB, and I thought that was
Hey
really
there, how's your
Yeah, I'll
trading
show
going?
you. If you go into the playlist here and you look for
right.
interactive brokers right here,
Mm-hmm.
I'll put it in the link in the chat
Mm-hmm.
box. This is the entire. This is for interactive brokers, and then
Uh-huh.
I have another playlist for IQ feed. What you were asking, who my data provider is right now. Um,
Mm-hmm.
is here it is, IQ Feed. So there's some
I
really
like it.
yeah, IQ Feed's really good.
Yeah, I've heard about them, but never used
Well,
them yet.
their forex data comes in from FXCM.
That's great. Perfect.
It's good. It's tick data, it's minute data, it's real time. You can get historical data. But right now, I'm using J4X, which is the Dukas copy, and it has its own data in there. So I just started playing with this over the last few days, and I'm really liking this. It's all free.
Right.
You can start with $100, and you can. It has a very wide selection of forex data, like Turkey, ruble, and they have you can download free historical data as well. So yeah, this is a great broker. I think this is actually better than Interactive Brokers. If these guys moved into like options and futures, this would be an awesome broker to be with.
Yeah, it's FX.
So, but here's all the data you can get, all this stuff, and then and this right here is all the strategies that you can run. So if I want to be testing some strategies like I can do socket programming, and it works. So I could set up a socket in Java right in the J4X, and then send data back and forth between my this platform, the J4X, and my client code as well. And
That's awesome.
it's really good. And you
It's good.
what's that?
Yeah, it's really nice.
But the thing is that Americans can't work with it. Like they don't accept U.S. clients.
Yeah.
That's the problem. But
Yeah.
I will tell you. Go ahead, man. Go ahead.
Yeah, Swiss banking got really complicated.
Well, no, I mean,
Vodka and everything. But
well, this company is called Dukas Copy. They do have a bank in Switzerland, but I mean they're a small bank, but from the forex side, they seem to be really good, and they're as good as I said. Like if these guys moved into futures and options, and they they would blow the doors off of Interactive Brokers because this platform is awesome.
Yeah, it looks great. Yeah.
Yeah.
So what do they? Is it like a Java portal, like a JSR portal?
No, it's all done through their API. So if I look up the strategies, you connect everything through the strategy. So I don't know here. Let me go to the folder. I can't remember the name of the application support, and then J4X, I think, and then strategies, and then files. So this is where all the strategy code needs to live. So here. So right here we have all the different strategies. So in my case, so let's say if I want to export data out of J4X and put it into a CSV file, it's very the coding is very simple. I don't know if you know Java at all, but it's just typical hooks from the API that you hook into, and then you just dump the data somewhere else, or as I said, you can send data via sockets. They also have examples on how to send data right into a database. So if I do a search for Dukas Copy API, let's say MySQL as the example, right here. The best part about it is they'll walk you through the code. Like they'll show you line by line how the code works.
That's nice.
You don't get
Yeah,
that. You don't.
great support.
Yeah, you don't get that with interactive brokers at all.
Not at all. Not at all.
And
You
this,
have to beg for
yeah,
information.
yeah, and this is right from Duca's copy, the J4X. It's like I was able to get stuff up and running within a few hours, being able to, as I said, dump data and dump data into a file from J4X, and at the same time, be able to have a Java client then send data like send orders and buy orders from my Java client into my into the J4X. It's really really good.
Nice, nice. Yeah, yeah, and it's funny that you mentioned Java because I think Java is going through some kind of revival in banking right now.
Is it?
And yeah, it is. I think the latest versions became super fast, and then there is Clojure as well, which is kind of like a Lisp dialect on top of the JVM.
Oh, really?
There are a few derivative guys using Clojure. Clojure.
Yeah, I know it. Yeah, yeah.
Yeah.
I know. Go ahead. Continue, man.
Mm-hmm. Yeah, and there are some very smart guys performing a lot of cool stuff in Clojure these days.
But there was the one time. I mean, down there, are you hearing a lot about Scala?
Oh yeah. I never programmed in Scala, but yeah, it's a functional language, right? On top of JVM as well.
Yeah, exactly. I mean, are you hearing a lot? Is there a lot of demand for Scala at all?
Not in banking, not in IB, not in trading.
But it's just purely really C++ and Python right now.
Yeah, C++, Python, super smart guys using Clojure.
Yeah, and a little tiny bit of R, as you said, eh? Not so much.
Yeah, not so much. Not so much.
So it's just really Python's where you want to be.
Yeah, exactly.
Yeah, because I'm really shocked. And you said that the proprietary language that Goldman uses you said it was called SEC, right? SE or slang.
No, it's
Slang. Right. Okay.
S-A-N-G.
Yeah. I know about that. But that's a really old language. I mean, that's been around. I know that's their proprietary language, like since I think the '80s. That language.
Yeah, but they keep recycling it. Yeah, I think they have a new incarnation of that right now.
Really, eh?
Yeah.
See, the problem if I was to jump around from company to company down there, and you're stuck in using only slang, that's really going to hurt your career, I think.
Yeah. Well, they're changing now, right? They used to be very keen on using it, and I think recently they're trying to open up a little bit.
They have to. They have to if they want to keep
the
talent.
They have to, exactly, because it's no longer an edge, right? Now it's becoming a liability for them because even those open source frameworks, they're super fast. So it's not just about competing against BlackRock anymore and Aladdin and all these guys. Right? It's about competing with the entire industry now.
Well, as I said, it's really a talent war down there.
Exactly.
But even a lot of the HFT firms are using Python. It sounds like too, eh?
Yeah. The thing with Python is that you can always code in C++ and just wrap things around, right? Put a wrapper on top, and then you just Python as the glue language. So it's always convenient.
And that's using something like Python, as you said, eh?
Yeah. Python went from just being a toy to be a super duper tool now.
Really, eh?
Now it's super fast.
Because I was playing with it, but I'm still using like Redis as the glue. Like use Redis as the data hub, and then have the Python, Java, and the C++ use it to communicate with all the different processes. And I'm telling you, Redis is so powerful in itself, and then when I saw this machine learning, I was like, "Good God, this is amazing!" You
It
know.
is. It is. Yeah.
Well,
Yeah. It's very versatile. It's like a Swiss knife, and the good thing is that kind of like very lean, right, and efficient. I think it's going to stay around for quite a while.
yeah,
Yeah.
yeah. I've looked at a lot of languages pretty well the last 6 years doing this, and I just over the last year got into Python, and I don't know. It's really become my go-to language for everything I do.
Yeah. Well, it's a very clean language, right? And the ecosystem is fantastic, right?
Yeah,
There's so many good frameworks, so many intelligent people developing very very
yeah,
good stuff around it. But, I think it's worthwhile to concentrate on that. That's
yeah.
what happened to me as well, right?
Well,
You know,
how long you go? Sorry, how long you been working with Python now?
for a couple of years, maybe 5 6 years as well.
Really,
So
eh?
yeah, before my entire life I programmed in Lisp and C++. Lisp was probably my my first language, first really really professional language for this kind of systems, and then C++, of course.
Right.
But then more and more I'm rotating around Python. I
But
would say for the last 5 years,
but it
that's what I've been doing.
but
Python.
all the jobs that I see are either C plus plus or Python. Only that.
Yeah, but the integration with mathematical backends and these new architectures like cloud architectures, and I think makes Python the go-to choice, right?
Yeah,
It's relatively easy to integrate,
that's
and
right.
everybody supports it.
Right, exactly. And the thing is being on a Linux environment too, because you know,
Oh yeah.
I mean, I dumped Windows about a year ago, being on this Mac, and
Oh, and yeah, and so efficient, right? Even if you virtualize it, it's so efficient. And if you install Ubuntu, right, Python 3 comes standard, right?
oh really?
If that, yeah, if you get, I think release 1404 for release 1604 for sure.
Really, eh?
Python 3 is there. Yeah, it's there, it's standard. Yeah, because the cloud. Are you familiar with cloud init?
Yeah.
It's a Yeah, so cloud init it's totally based on Python 3. So and everything boots up on cloud init these days, right? On Amazon Web Services
Yeah.
and Google Cloud Engine, right? So
Yeah, well, that's another thing with the machine learning. I think the stand like I'm not in industry at all, really, so I'm not able to talk to a lot of people in industry. But far as I know, with the machine learning, everything's really used with Google TensorFlow, isn't it?
oh yeah, totally. Yeah, no doubt about it.
I mean,
Yeah.
did you guys do a lot of machine learning, or are you seeing a lot of that? Or are you still doing?
Oh yeah, we do. Yeah, I did it a lot myself, but mostly around yeah tensors. But we didn't use much TensorFlow. We had our own framework
Oh, I
based on
see.
Tensor. Yeah, but yeah, that's the right technology, right? It's more efficient than convolutional neural networks, and it's simpler as well from a mathematical framework
Right,
perspective. So yeah, it's good. It's awesome that Google open sources. It's really awesome.
right. And you guys, so yeah, in your company, are you guys look? But here's my question: are you finding a lot of firms are using their own machine learning frameworks, building their own versus going out and uh,
That was the trend, right, over the last 10 years. But now the open source toolkits are getting so good that people are simply dumping what they develop because it doesn't make sense anymore,
right?
right?
But
Because the new open source toolkits are much more efficient and flexible, easier to use.
And again, it comes back to retaining talent too. I would imagine because
Yeah, exactly. And it's a wise decision, right? Sometimes the companies get attached to these toolkits because they invest so much money developing it,
yeah.
but it's simply wiser to just forget about it and embrace these new toolkits that are more efficient, easier to maintain, and
And again, is machine learning something that firms are using just to play with, or are they actually seeing there is a worthwhile effort to develop and utilize the machine learning because they're actually seeing consistent profit with it? I mean, are you seeing that at all?
I see a lot of experiments in that area. I don't see super duper professional systems that actually take advantage of that for now.
So
I would say that the professional systems are mostly still based on stochastics and traditional traditional stuff, but ML is just little by little getting there for certain strategies, but not. I don't think it's widespread at the moment.
but that's what I'm always struggling with. Where you always hear about machine learning, you hear a lot of hype about it, but the question is, are people actually uh, have it implemented in a live trading environment and are actually using it where they're actually getting consistent profit from it? That's what I'm trying to understand instead of, well, was
Yeah, yeah. Well, there's a lot of activity in terms of correlation engines, right? And using MNL on top of correlation engines, and I think that's where it's being used mostly these days. Right?
oh, I see. Okay.
It, yeah. So you put some like we just described, right? Like a convolutional neural net on top of a correlation engine,
Right.
and then you start to figure out pockets in the market that you should pay attention to,
Right.
and that so and then you can create some kind of flow, right, where you detect the pockets in the market and then you apply your strategies to those pockets.
Right.
And
So,
I think I would say that machine learning is very good for that, for you to establish the right focus for
right.
your strat.
Yeah.
Uh, and I think that that's the major application right now.
Yeah. That's the one that's proving itself.
Right, right. Because then you can effectively use your compute nodes and your resources, right? Instead of just brute force trying to explore the entire market, you just concentrate on certain issues and you remain there for certain periods of time throughout the day.
Right. And so what, I mean, are they looking for historical patterns, or are they looking for real time patterns on the fly and then
Yeah, yeah, mostly real time on the fly. And there's no much use for historical data, especially on massive scale like these guys work. It's more about real time. Yeah,
see that's the thing
time data.
that's the thing that saddens me, because I have people that come through and they always ask about back testing, and they fall in this trap where they look at data, they want to back test it, and they put so much effort onto that. But what I try to figure out is like if some like firms ever use like a stock simulator, um like just not a stock simulator, mimic a
Mm-hmm.
bunch of participants in a simulated market event, and then build potential strategies around that market activity, and be able to develop strategies around like that simulated environment, and then take that same strategy and then apply it into the real market, real time, versus spending so much
Mm-hmm.
time on static back, historical data over a certain period of time, and it just seems to be the wrong approach.
Yeah, well, back somebody. somehow people backtest way too much.
Yeah, all
Yeah,
because all the professionals I talk to, they go, we don't do any. I mean, they'll do back testing to a little point to validate maybe a trading idea, but
right.
they're not slaves to back testing.
Oh yeah, you should not. Yeah, you should not. And markets they change so much. That's why ML makes a lot of sense in terms of establishing focus throughout your day, right? You're doing while you trade, because then you can identify pockets of opportunity based on that, and then you apply strategies based on those conditions, not just because you back tested it.
Right, exactly. Yeah. I mean, the way I look at it, like I've been studying for the last year or so. Let's say, for you, like you say derivatives like options, where you're studying, let's say, things like Greek analysis, and right in there you have so much data to work with from a mathematical point of view, where you can also at the same time study the futures market because options are basically the future is the underlying of the for the option. So if you put a lot of the focus on the traditional macroeconomic reasons on why there's a price action for a particular commodity, let's say, and putting an understanding what drives that price action, which is usually driven around macroeconomic activities, you can build a lot of really cool strategies
Yeah,
around that and looking, as you'd say, the correlation on that type of data.
yeah,
Does that make sense?
exactly. It does, and I'm glad you mentioned that because tapping into social media and out of market data pools is also very important, and that's probably where ML can make a big difference, right? Because then you can start to analyze not just big data and market data, but you can also start to analyze context, right,
Yeah,
in which you're operating,
yeah. Well,
and where machine learning can make very interesting, can produce very interesting insights, right?
yeah, because like right here in the JForex, like for instance, in the world of forex trading, like here I have the economic calendar of what's coming up over the next like right here, just for tonight, the 31st, and it's a Sunday. You see all this activity, like let's say the South
Right.
African rand, like central bank on the reserve. Obviously, that's going to be right in itself an opportunity to put on a
Yeah.
trade with South African rand, and then all the um, currencies that flow around the rand. You know what I'm saying?
Oh yeah. Yeah, especially for forex. Yeah, I agree. I agree.
But it's the same. I would imagine it's the same for the futures market as well. I mean,
It
if it's
is. Yeah.
is that how a lot of the firms use it? Well, they'll use these calendar events, and that they know that these could be market headline news where it'll impact the currency pair on that particular, let's say Norway or South Africa, and you build strategies around that on those events.
Right.
I mean, is that typical what's happening in a lot of the institutions and how they build their
Yeah.
strategies is built around macroeconomic events?
Oh yeah. Well, yeah. At a top level, that's what happens, and sometimes you have strategy there just around the calendar. Yeah. Depending on the day of the week, depending on the day of the month, then you gotta have different strategies. No doubt about it.
But is that the typical strategies that like don't just say yes or no if you can't answer it? I understand, but that out of any firm from a professional institutional level, a lot of their profit from this is how I would see it. A lot of their profit is driven from these type of events. So if they have strategies built around these calendar events, a lot of their firms' profits going to be driven around these type of events. They're like the big profits. You know what I mean?
Yeah. Yep.
And then there'd be a bunch of smaller strategies just running every day, maybe scalping or something like that. That's just looking for market opportunity, but the real big profit potentials in these type of events, I would think.
Yeah, yeah, it is. Yeah, if you think about in the more traditional markets, right? It's about corporate actions, earning calls, and stuff like that, right?
Oh, I see.
Uh, and so it's not just calendar, but also it's about public news, right? Stuff that's out there, and then you trade around that, right?
Right. Okay. So so
I would say that a combination of corporate actions and earning calls, right, are probably great drivers for that.
gotcha. So is your firm mostly focused on equity then?
Yeah, mostly equity options. Yeah,
Equity options. Okay.
yeah.
I mean, are you with a fairly big firm or like a smaller boutique kind of firm?
It's a boutique, but then we provide consulting to big firms. Yeah.
Oh, I see. Okay. Yeah, I like it. It doesn't make sense for me any other way to try to explain it to people on how the institutions, the big ones, how they earn their profit from automated trading and the strategies they use to implement. And I'm figuring that it's got to be around a lot of these calendar events and news in the markets. And I've
Yeah,
got I've
yeah,
got I've got multiple traders that like are 7, 8 digit, and all of them are playing in either forex and or futures on forex, or sorry, futures. I can always get currency futures as well as or options, because it's options where they make some serious mad money. Um,
oh yeah, and they can be used for income, for almost fixed income strategies as well, right? If you think about the treasury desks, that's something that my firm did a lot, right? Just strategy for treasury desks, and they all have derivatives on their belt,
yeah,
and they generate income on a very very regular basis. Right? You have a big capital pool, right? And then you allocate only 10% of that, and you put maybe half of that in derivatives, and still you can generate good return for your total
yeah.
capital.
So for you though, I don't know exactly what you do, but maybe you can answer this way, just a generic question. Like a large percentage of your job is not really focusing on the strategies themselves. You're mostly focusing a lot of your time on the portfolio analysis and trying to simulate the proper weighting of particular positions to get optimal return. It was
Yeah, and protection. I would say that these days it's a lot about protection, right? It's about identifying risk, and I would say more than trying to optimize the portfolio for returns. It's a lot about gauging risk,
right.
and that's why the discussion that you raised about machine learning is very important, right? Because then you can also detect danger zones and perils,
Right.
right? They're being shaped, and that's why that's the kind of stuff that we are concentrating
How
more
so how
this day, right?
so but how far do you focus down? Like let's say with under Trump, with so much volatility in the markets based upon one tweet,
Yeah,
how do you
yeah.
you can't forecast that. It's so
No, you don't. You do not, right? That's why you need a real time correlation engine, so that it's just like a radar, right? It's not about forecasting; it's about actually measuring it.
right.
Right?
Okay.
You're actually checking the market conditions on the fly,
Yeah.
and then you're operating with that kind of data, not just because you have a predictive model or something like that. Forget it. Yeah. All these serious guys, they don't use predictive models because they know that they they don't work. Right? You can't predict anything.
Yeah.
You
Yeah. Yeah.
basically
Yeah.
you basically have to measure. It's almost like surfing, right? You have to catch the wave.
Right.
You can't
Exactly. Exactly. Yeah. So that's kind of like what you're looking for is you're looking at the market, trying to figure where the next big wave is, I guess, and then, as you said, just ride it out for max profit.
Right.
I read a lot of the Bloomberg news apps, and I consume that every day, and it's really, for me, it's like trying to figure out maybe where the hot money will go. It's really basically watching hot money flowing throughout the globe. So, for instance,
Right.
if you know the emerging markets are going to be hot over the next 2 or 3 days, that's where you put your investment in, because you know that there's going to be a large wave coming out of that, and that you can ride that out.
Right. Exactly. Yeah, that's a good approach, right? Yeah. And more, like I said, right? I think using your systems as a radar, right, instead of just trying to predict it.
But
I think that's the way to go. Right? That's why, going back to how we started the conversation, right? That's why, in terms of tool set, it's really important to have solid real-time streaming,
yeah,
solid graph database, because then you set up your engines, let's say your correlation engine, on top of big data, and tick by tick, you can identify the patterns that you're interested in, and then you act on them. Right? So it's not about trying to predict them. It's more about trying to define where the danger zones are.
Right.
Get out of there and look for the opportunities.
Are you guys like using a lot of the more proprietary Bloomberg data usually?
Not really. Not really.
Really?
Yeah, Bloomberg is trying to push a lot that, and BlackRock is also trying to push a lot that.
Right.
But then you end up becoming so dependent on them, and you're not fully aware of what kind of models they're using.
You're right.
And then it's almost like a trap, because then you end up on their ecosystem.
Yeah.
You end up drinking from their Kool-Aid.
That's right. Yeah, you're right. But do you try to get as close to the market data, what's coming out of the markets, like CME, let's say, or the
exactly.
NYSE?
Exactly.
Okay, so you're using the right from the horse's mouth, right from the exchange data.
Exactly.
I got you. Okay. Yeah. And you were talking about like the graph databases. I don't know if you know. Now, have you built your own, or are you using a proprietary one? Like the big one that I like the looks of is VoltDB.
Mm-hmm. Yeah, exactly. That's one that we have been experimenting a lot. Yeah, it's one of the most efficient ones out there.
Right. Yeah.
And especially when you put it in a cloud setup, right? And you spin up a bunch of nodes, it performs very, very well.
Really good. And
yeah, it's really, really good. Really, really good.
Yeah, because
then of course you have of course the Oracle streaming engines are extremely fast too, especially
really,
the one that I know. Yeah.
So you guys are using Oracle too, eh?
Oh yeah, Oracle has a lot of very, very efficient stuff. Well, they all come from the old Sun, right? From the Sparks and
right.
And all that stuff. Yeah.
So let me just see if Redis has got any graph database capability. I'd be interested to know. I've never done this. Looks like they do. Yeah, they're like, what they're doing is they're building out these extensions to broaden the diversity of the database, and that's why I think they're building the new module concept, so people can come in and build new modules and extensions and extend the capability features of Redis. And this may be still a good path to go, because with the new 4, I haven't really been watching with the new features and what's coming out of it. And I don't know if you know a company called Redis Labs. These guys are amazing.
I don't know that.
What they did was they teamed up with with Intel, and they implemented. No, I don't know if it was Intel or IBM, but they custom built a Redis solution for flash memory, and they implemented Redis onto this flash memory, and they were able to pump out 4 million transactions per second. And as soon as I put a tweet out, I got into all these online arguments with all these other data providers. You know what I mean? But these guys are brilliant, and apparently the Redis. Go ahead. But here's the performance of Redis Labs versus anything else that's
Anything else?
yeah.
Check them out. Yeah, check them out.
Yeah, these guys are amazing. They have a cloud solution as well. They're really good. This company, and I'm not sure what other. The only financial I know is I guess the Motley Fool, but who else is using it? But it's a good company.
Yep.
Yeah, I think we got a new guy join us, Stevie. Welcome, dude. Yeah, this is awesome. I learned a lot from you. Yeah, but
likewise, Brian. Let's keep in touch. And,
yeah.
Right. Let's exchange information. And,
sure. Are you?
Yeah, keep it up. Keep it up. You're doing a great job.
Oh, thanks, man.
Webcast, publishing.
Well, I'll be doing another one. I don't know if it's useful for you, but I'll be doing one on Dukas copy, the programming as I showed you earlier.
Oh, okay. Yeah, send me the link and
yeah.
Be in as well.
Are you on my Facebook at all?
Oh no, I'm not. But I can send you a LinkedIn invite.
Okay. Well, I do post it on LinkedIn as well.
Oh, great.
So I don't know. Just get in touch with me. You have my LinkedIn contact?
I think.
I don't think.
Not sure, Brian. Yeah. I don't think so. Yeah. Send me.
Do you have my email address?
Yes, please. Yeah.
Okay, just get in touch with me. Get in touch with me, and then I'll send it to you. It's if you're on my email list, it's in there.
Okay, perfect. I will do that, Brian.
Oh, you know what? You know what else? Just so you know what else you can do. This is easier, as well. If you go to my site under blogs, I'll give you the link.
Right.
Just go under the blog.
Mm-hmm.
As usual, my site's taking forever. Right here under the calendar, I list everything here. So if you go under here, tips and tricks for Dukas copy, and that will take you to the link, and I'll give you the go-to meeting login ID. Okay, so that's another way to do it. Okay.
Wonderful. Brian, thank you so much for putting together this session. I really enjoyed it.
Oh, no problem.
Let's keep in touch. You have a great night.
Okay, thanks, man. Same with you. I don't know.
Bye-bye.
See you, man. Bye. Steve, you just joined us. If you got any questions at all about these scripts I was going to present?
No. Can you hear me?
Yeah, I can hear you, man.
Oh, that's great. I'm just trying to figure out how to work this GoToMeeting.
Oh, the GoToMeeting, yeah. Well, it's pretty standard what a lot of the corporations use. We just had a good talk of this guy who's out of New York and talking about what's going on down there and what technologies they're using and a lot of the big firms and stuff. So it was about that for the last hour or so. It was really good. Opened my eyes. And how a lot of the big firms are now looking for data, market opportunities, and how they're doing it. And this is being recorded right now, so I'll post it later on tonight with on YouTube. So if you're interested in watching it, I don't know. I was gonna do the presentation on my Python tonight with the two scripts. I don't know if you've watched the video on my entry and exit for the markets. I don't know your programming skills at all, but when we do this, how can I help you out? Like what are you If you got any questions or anything that you'd like to have answered, we can do it if you want. It's not a problem. What your goals are?
No, that's all right. I just thought I'd try to get the computer to drop in on you and get it to work.
Right.
I'm succeeded.
Cool. I'm happy for you, dude. Yeah, it's pretty straightforward. I mean, GoToMeetings, like I said, the standard. I've looked at a lot of other ways to deliver these webcasts, and I've tried the Facebook Live, and it's not bad. The problem is it's not like one-on-one where the Facebook Live is out of sync. So like you'll say something or type something, I have to wait like 20, 30 seconds to get it, and then you have to wait another 20, 30 seconds to get my response. So it's not entirely 100% real time like on GoToMeeting, right? So I just stick with GoToMeeting. It's a lot easier. You know what I mean?
Yeah.
Um,
Except it's been almost a year since I've tried it, so
right.
now it's all different.
Well, I think it's the same. It's just the front end on how, like the back end's the same for GoToMeeting, but they've changed the website and all that. The front end's changed quite a lot, but the technology is the same. Like it's just you click the GoToMeeting, click to the login ID, and it should automatically walk you through it and set you up and stuff. But now you've been through it, so if you ever want to come out to another one of these, you know how to do it. So that's the key.
I used to come to see these, but now it's I've got the microphone and I've got a webcam.
Yeah, dude, it's changed.
None of this worked before.
No, I know it's changed. Like I've done Facebook Live events, and you could treat it like an actual TV station, like an actual what you'd see on TV, and you can go high quality. You know, I'm still thinking of doing it. It's really powerful what it can do, and like I'll be hyping up my marketing probably in the next few months to build out bigger audiences for these sort of things because I used to push it through Meetup and they've clamped down on it, and my audiences are really tiny now. So I'm more like at an approach where I'm lucky to get something to show up. You know what I mean?
Yeah.
But I used like we did one about 2 weeks ago, and we had about 20, 25 people come through it, but it was on machine learning, and also those machine learning events can bring out some good numbers. But I mean, I'm doing one on in Python, a market entry and market exit for position handling, and I don't know, people don't seem to be too interested in that. So if it's machine learning and dancing cats and dogs, and you might be able to get good numbers. But we had like the one we did 2 weeks ago was not bad. So welcome. I just don't know what I can provide for you because the other thing is I'm trying to get people to watch the videos, and then if they got the questions, they come into these and we start covering those questions for them. So that's what I'm trying to really push now. So, but like I said, overall, I mean, you're here. You just let me know if you got any questions on anything, and I'll try to answer what I can provide for you.
Well, I'll try to get on more.
Okay.
The meetup ones, a lot of the times I couldn't get the ID to work for the meetup, but if you email the meeting ID and a separate one on your own page, not the meetup pages,
Yeah.
it seems to work okay.
Well, the meetup pages I can't do anymore because for years I was able to post all these virtual online events, and then they sent me a message and they closed down one of my groups, and yeah, I don't want a chance pushing the login ID on Meetup itself because they're gonna cut me off. So that's why I put everything either on this news section I put on my website, the calendar event under the blog, so you get all the different events on the side here on the side tab. So like
Okay.
every week, I'll like if you come under here under the February, you'll get all the events. So next Monday, I'll have one on this Dukas copy, the broker that looks like I'm gonna go with, and I don't know if you're in Toronto, we'll have like
No,
a
I'm down in Michigan.
yeah. It's
I followed Ducascopy over the years because they're kind of interesting. But
they're awesome. But the problem is that I just found out last Thursday, one guy goes that he's in the U.S. and he can't sign up to Duca's copy. You know what I
yeah,
mean?
that's strange. I guess maybe the Swiss looked down on us.
No, what happened was Duca's copy owned, or no, there was a broker called DXDD. So what Duca's copy does, and a lot of the brokers do it, they'll white label their technology. So if a company comes along and says, I want to run your technology in my country, but we'll take care of all the regulation and comply to the regulation locally, then let's say Duca's copy will license the technology to that company. So they license the technology to this company called DXDD. And about 2 or 3 years ago, FXCM bought out DXDD, which meant all their American clientele got cut off from everything from Duca's copy. And the Americans have never been able to get back onto Duca's copy, the brokerage, right? And that's
I see.
a lot of people aren't happy about it, but I mean, I have my J4X running right now, which is the proprietary platform from Duca's copy, and I played around with quite a lot of stuff. Actually, I put up a video yesterday on my YouTube channel on let me just pull it up here. I put up a video here called "Brutally Honest Opinions of Forex, LMAX." I went all the brokers,
Yeah,
and
I watched that.
yeah, yeah. Well, that's the thing. It's like if you watched it with well, I mean, okay, a good alternative, as I said in the video, is that you can use LMAX, and LMAX is awesome. The only problem is I don't know what your trading account size is, but if you got 10 grand, I would probably suggest going with LMAX. They're phenomenal. And the thing is that if I'm going on Duca's copy and I'm purposely starting with a small account, like a couple $100 account, and then once I get quote unquote professional, I'll easily go on to LMAX because they got some really cool services there that I like, and that they will support the U.S. the Americans on top of um, with all the major other North American based brokers, as I was mentioning to the guy earlier. Um, and I mentioned in the videos, the selection of your currencies is really important because you have the standard cross pairs, the major ones, but you look at the small ones like the Norwegian krone, the ruble. The big one that you'd want to get access to is the Turkish lira because that one it's so volatile that and when there's volatility, that's market opportunity. You know what I mean?
Uh huh.
So when you
Yeah,
have go ahead.
I had a forex account with Tradestation, and then they discontinued it and sent it over to Oanda.
Uh,
I'm not as happy with Oanda.
oh, Oanda's awful. Last month I still have probably I think 2 support tickets with them, and I just dropped off and I just lost interest in them. If that's just setting everything up and trying to get the API to work, and it's awful. And I mentioned that in the video. And then as soon as I purposely tried out Duca's copy, and I was shocked on how fast I was able to get all the strategies I wanted up and running and be able to have them communicate with my other software. And the customer service was not awesome, but it was way better than Oanda. And I got a contact now at Duca's copy as of today, out of all places, Latvia. And he's kind of like the senior guy. So now that I know him, if I have real serious problems with Duca's copy, I get on his ass. It's the same thing with Interactive Brokers. I had a contact there. And once you have that set up, you're good to go. But with Oanda, it was just, I don't know. They just don't seem to care about anything. You know what I mean? So
Well, I think they're a robot.
I don't know what they are.
But, they have a thing where they say, "Oh, chat with support." You go on there, say, "Oh, we're not open.
yeah.
We're not active at this
Well,
time."
here, check this out. Like when I'm in the software, and this is now in Switzerland, I can open up this support ticket, this support chat, and boom, it's gonna load me, and I'm gonna be like, here's my previous chat from a few days ago, but I could just type here and then give it 5 minutes, and I'm talking to somebody. I do Dukas copy over my concerns, and this chat service was pretty good, and that's right from within the platform. You know what I mean? And that's the same
Yeah.
six, I think six open 6 days, 24 hours a day, and they have offices throughout Europe, obviously, and then going into Asia as well. This broker is so good, and I don't know if you saw my video, the community part as well with the contests and whatever else, and the forum and the wiki, they really go all out. I mean, it's really solid. So I like
Yeah, I
them.
thought that was I thought that was kind of funny to have the social aspect.
Oh yeah, with the hot miss Dukas copy.
Yeah, that was cool.
Yeah, it's kind of exciting to be part of, and I think they in their own genius way they do that to sort of get you all hyped up on the opportunity as being a forex trader through the Dukas copy ecosystem, I guess you could call it. It's really good, and from a retail trading point of view, I do enjoy that. So you know, so I gotta say, working with the Dukas copy, and I've only been starting with Dukas copy maybe about a week ago, and so far, the junior customer support people aren't the greatest, but once you go into the wiki, the forum, it is a true self-serve kind of help where you can get things up and running pretty quick. But with this forum, this platform is quite good actually. And I don't know if you've played with Interactive Brokers or TWS. That's pretty good. I don't have a problem with it like a lot of people do. But this platform is just as solid as um, as Interactive Brokers. The only problem is it's only pretty well mostly forex. You know what I mean? But they do have the major commodities like oil, and if you want to trade gold against the U.S. dollar or silver against the U.S. dollar, they have those pairs too. So when you're starting out, it's not a bad little brokerage to work from. And I think the trust is the other big factor too. And I'm starting to warm up to Dukas copy as well because they have the support and they have the service as well. And that's where you start building up the trust and the confidence when you start to scale up your account. You know what I mean?
Yeah, I think one thing right now I'm not trading with forex, although I've had some interest in the Chinese currency,
Yes.
and the Tradestation still doesn't have it.
Yeah. Well, guess what? You do have it
I
right
mean, not
here.
not even the data feed. They don't do forex anymore. They gave theirs over to Oanda,
Yeah.
but you can't even bring up a chart of the
There,
yuan or renminbi.
there's got to be a big reason why TradeStation would get out of that because that's a huge growth engine. And maybe it's too competitive for them. I don't know. I wouldn't know.
But you can pull up the CNH USD online.
Yep. Got it right here. Just bringing it up now.
Yeah,
Actually,
and I think that's going to be something important in
big
not too
time.
distant future.
Yeah. Well, right now, as I said in my video, you want to be in the more exotic currencies because that's where the volatility will be, and especially with Trump now in power, he like I tell people, if you want to get in the markets and make money through volatility, you can make a boatload of money as long as Trump's in power and he's yapping his gums. That adds so much volatility in the markets. I mean, look at these kind of moves here, and this is on the U.S. Uh, yeah, no, that's the U.S. dollar and the euro.
Renminbi and yuan are the same thing.
Yeah, exactly. But I have it right here.
Yeah.
Yeah, that's right there. So you do have access to that.
It's gonna get bigger.
Yeah, yeah. Well,
yeah, Trump is not very happy about China, and neither is our military.
yeah. Well, I've been watching. Believe me, I think the world's been watching what this guy's been doing. So
But the prior administration was really tight with China.
yeah. Well, I mean,
Heck, we got even family tight with China. I mean, my brother-in-law is married to a Chinese, and I know people that join families and travel back and forth, and It really doesn't make a whole lot of sense being enemies with them.
Yeah, you can't because I mean I'm not a big fan of the TPP, but when you look at the country list of that are part of the TPP, and then there's Asia and their alternative Asian Chinese bank that's backed by China. That's one thing, so they could easily step and fill that void. But the other thing a lot of people don't know is that China, they did this on purpose. Like about 2 weeks ago, they sent a train of Chinese product right across Eurasia, and they sent it right from China right into a rail trail yard in London. No shipping involved, and I think that's a huge advantage that China will have over the U.S.
Wow.
They
Well, I
built
know there's talk of putting a railroad across
the Bering.
into Alaska. Yeah,
That's
across
right.
the
Yeah, I
Bering
saw that.
Strait.
Yeah, but I don't know when that will get built out. I saw
Pretty
the.
soon.
Is it
I
actually?
don't know when.
I know there's talk of it. I think that will be a big thing. Uh, but if they are able to do that, it's going to be a big deal. And but then again, I mean, where's the relations going to be with China for the U.S. Right?
Well, we have to work something out.
Obviously, but you know what's going to happen is something will get worked out, but then that there'll be grumblings from another politician who will get eventually voted in, right? So
Yeah. I mean, who's to say that Trump won't do it?
that's the thing. I think he's so scared
I
of.
have a feeling that he's um, um, changeable.
Yeah.
Like if he discovers something, he might go for it.
Well, think of it this way: he's only been in power for 1 week, just over 1 week. He's promised to
Yeah.
do so much, and he's already got all these executive orders, but he still has not yet talked anything about trade. And he did say, day one, I'm in office, I will call China a currency manipulator. He has not done that because he knows. I think he really down deep knows that as soon as he does anything with China, China will retaliate, and it could really kill off the U.S. markets right now. And I really think he's scared of doing that.
Yeah, well, he probably realized he doesn't know what he's doing.
I think, yeah, after yesterday or on Friday when he did that ban on the Muslim thing, and like he's turning around and banning people who have green cards, people that have dual citizenship, and the Department of Homeland Security don't know if people with dual citizenship are even allowed in the states. And it's like, I mean, it's
I think
obvious.
he's got a lot to learn. Like he said that originally he didn't want to bring people in that might be terrorists that haven't been vetted,
Yeah,
which is happening. A lot of people are being brought in. I've heard even in the belly of empty UPS planes that are coming back to get reloaded, there's people in them, and they just walk into the country,
oh yeah.
and they don't vet them. Somebody, the UN vets them, not the United States.
Well, what they say though, there is a town in Mexico. I think it's in Central America, and that a lot of the terrorists, the jihadists, will like. There's like an Arabic open market in somewhere in Central America. A lot of the jihadists go there. They get assimilated into the culture of the Central American migrants, and then they'll move up with the local migrants in from Central America, and then move in, going through the traditional means, no different than I don't know whoever going into the U.S. border unchecked, and apparently that there's a lot of that happening. And
That's what I understand. Although I understand the border between Canada and the U.S., which we're right by. I'm less than an hour away from Windsor,
right,
and I could just drive up the Queens Highway to Toronto.
yeah,
No problem. Just
yeah.
drive right across.
No, those border checks are tight. Believe me, I've had my issues crossing through Detroit. And I know even throughout New York State, like through Niagara, is a problem. As well, not really a problem, and the airport's really tight. Coming in from Canada, I just don't know why. If they, I mean, let's think of it this way: 9/11, those guys went through New Hampshire, and New Brunswick. I think how many were there? There was 9. And it's like 6 went
Yeah, I
through.
don't really know the whole history of that, but I know from
They
going through Windsor, I've always gone through customs. I never had any, always got. I even carried merchandise into Canada back like 20 years ago, and I got laughed at by all the truckers because I was a rookie.
right. The thing,
But I mean, they check out the paperwork. You have to do that.
yeah. Well,
We just walked through, like down in McAllen, Texas. My daughter lived down there, and there was helicopters and all sorts of stuff around, but that apparently people could just walk across and not even be interviewed
yeah,
at all. They just walk across.
yeah. But I think if a jihadist whatever wanted to get through, they could. Um,
They've had investigative reporters, walk back and forth with a sign, and they were just ignored.
yeah. So I don't know. I don't think you could stop it. Like I was watching on CNN. They say they have now huge networks of underground tunnels from the town across from San Diego, right into a warehouse on the San Diego side, and they're having they're just starting to discover these now, and these are like really sophisticated tunnels that you used to have in Europe, where they'd be like 750 kilometers long, or sorry, not kilometers, meters,
Yeah.
and that's what they do, and they say we cannot stop that, and even if they built like a 25-foot ladder, okay, so you get a 30-foot ladder, you know what I mean?
Yeah, I mean they have tunnels in the Middle East too. From Africa to Israel and stuff like that.
Yeah, and I really don't know if they could really stop it. I mean, there's just so many of them wanting to get into the U.S. It's crazy. So I don't know.
Yeah, I think they go both ways. Some if you live near a border, I can't imagine it being there's no traffic.
Oh, there's traffic, man. I mean,
Oh yeah, that people go back and forth like you go across town.
yeah. I know in Buffalo, from Niagara into Buffalo, yeah, some people work and commute into Buffalo from Niagara, and that's not unusual. It's pretty hard for me to as a I could come off looking like an American. It's still a challenge to cross into the U.S. border. And now with the biometrics that they just introduced at the airport, with I think it's iris and fingerprint both. I couldn't see how you could cheat that. It's just next to impossible. And they're really tightening it up, but I don't know really if you can really stop what's going on across the Mexican and U.S. border. It'd be tough. And not only that, remember you got drone technology as well, right?
That's true.
You know, so I don't know. I don't know.
And we have satellites, and it's not always cloudy.
That's true. Yeah, exactly. I don't know. I mean, yes and no on Trump on certain things, and no on others. It's just I don't know. We'll see. I think a lot of people are like myself, like on a wait and see attitude, and see what this guy comes up with. So.
Well, I know he's got a monster problem. If he tries to bring a lot of factories back by altering the tax, the cost of labor.
That's the other big thing.
Taxes. The companies, they work by algorithms, just like any trading.
Right.
And whatever it costs less, they do it.
Right.
That way. And when we have people doing manual labor in China because it's cheaper, and then we bring those jobs back here, that will be simply, instead of China using putting robots in their factories, we'll put robots in our factories.
Well, they're doing that.
When all those people are put out of work, they're going to have to find something else to do.
Well, they're doing that already. I mean, there's a company out of Japan, actually, and you go onto YouTube and you just look up I was watching something for Factory City where they have 17,000 people working in this factory making toasters and oven. I mean, all kinds of stuff. And now with robots, it's amazing because they do the work of like hundreds of people. And for the Chinese, it's scary because they used to be able to bring in so many people and employ them like and just treat them like dirt, basically, like 12 hours, 6 days a week, typical slave labor kind of thing. And the Chinese will do it because they have nothing else going for themselves when they live in um, rural communities, right? But then all of a sudden you get countries like Vietnam, Indonesia, Cambodia now that are literally taking all that factory output that the Chinese had and used to be able to use to their advantage because of the labor was so cheap. But now in China, everything's getting expensive. So a lot of the Western companies now are moving that same labor and putting them into other markets like China. Sorry, into like a big ones, Vietnam, right?
That's right.
And then
It's all relative. If it's cheaper, it
that's
migrates
right.
there. It's like, even brokers, they charge lower commissions. The business moves to them.
Yeah. Well, interactive brokers is cleaning up because of that. I wouldn't know how if I was the broker. I wouldn't know how to compete on charging when you have a big player like IB charging $1 for a commission fee. You know what I mean?
Yeah.
And then you get banks that are charging $5, $7 a commission fee, right? I don't know how they stay in business.
Right. Well, I don't either. But I didn't have to do much foreign exchange if I traveled overseas a few times in my life. That's the only times I did the trade.
Right.
I didn't trade foreign exchange unless I went to Europe.
Right.
Or to Africa. And when I went to Africa, I worked there for university for a year. I had to set up a way to work through a Swiss bank account to get a better exchange rate than through the local exchange rate.
Mm-hmm.
And when I came back to the United States, that was the end of it. It wasn't, there wasn't trading like in and out of a cross exchange rate to earn money when there's due to fluctuations in the exchange rate.
Right.
It's a entirely different thing.
Right. Yeah. Yeah.
They sent our per diem over there. We changed it into the Kenyan shillings and then spent them, and we lived like kings on almost nothing.
Yeah. And that was that quite a while ago, or is that fairly recent?
Yeah, that was long ago, back around 1970.
Right, but now it's pretty obvious. Like the economy is anywhere now is so advanced, and they're getting more expensive to live in these markets. It's you won't. I don't know if you'd be able to do that anymore as much.
Well, there we did have some landlines and stuff like that, but most of the those places like China or Kenya or anywhere, they didn't have the communications infrastructure that we had in the United States, or even Russia,
right,
or in England or Europe.
Oh no,
and now all over, it's better. I can, in Korea you could get gigabit bandwidth internet for dirt cheap, and here you can't even get a 20th of that for $100.
Right. Yeah. Yeah. I know. That's the thing. A lot of these economies are advancing so fast, and they're more advanced now. And people don't in the States don't realize how advanced a lot of these economies are, and especially like growing economies like Kenya and Nigeria, especially, or South Africa. They're just as advanced as what you can get in the States.
Or more in some
ways.
ways.
Yeah, exactly. Yeah, totally. I don't know.
There, the infrastructure is newer. I mean, my first experience with that was that European television was more advanced in the United States
Oh
because they
yeah,
installed it later than we did.
yeah. When I was in London, I loved it because you turn on the TV at the hotel and you're getting channels in from the Mid East, from Africa, from Russia, even Asia. You know what I mean? It was just awesome to see that. Um,
Yeah, and the internet totally blew that
that
away.
exactly.
When there
Yeah.
was a tsunami in Japan, I just happened to be on the computer, and it was all sent to me by Al Jazeera in real time from a helicopter.
Yeah.
And I
Yeah.
watched it happen in real time.
But now with the phones and stuff and the mobile, I mean, on Facebook, you can get all kinds of alerts of your friends, and it's crazy. And the thing is, when it comes back to trading, like here in the Dukas copy J4X, I don't know if you saw this, but here under the live event calendar, where am I? Let's see if I found it. No. Not sure. I'm still new with the software here. So yeah, right here. So you can get all the news events right from within your platform, and you can program that into your software and your strategies and trade around that. It's just mind blowing on how sophisticated it's getting.
Yeah, what I see in the future is like the obverse of Amazon. When I was like 15 years ago, I was in a company making loudspeakers,
Yeah.
and we go over to China and bought machines that were made for cottage industry, brought them back to the United States. So we had factories where we made a lot of our own components using the Chinese machinery, which you could not buy in this country. You had to go over there to buy it,
Right.
because over there they have cottage industry. You go to somebody's house, and they'd have a injection molding machine that would be somewhere between the kitchen and the living room.
Yeah.
And it would spit out little plastic bits. Somebody would come around every day and pick up a bucket full of them and take them to a factory where they'd be assembled into something slightly larger, and then it might become something that they shipped over here, and we put them in our product, in our factory, and assemble it together and sold it.
But think of it this way now with the 3D printing.
Yeah.
I mean, like, I don't know, man, if you've ever seen this,
well,
but
with 3D printing, we'll have you'll be able to make plastic parts that go into to a larger assembly.
yeah,
And instead of somebody like Amazon bringing you things in the mail and dropping it at your front door, you'll put the box outside. They'll come by, pick it up, and take it to the factory, the thing you made in your house.
That's right. Well, now part of this factory city, that's what they did, is that they would be making parts as well in-house. So if they need a certain thread or a certain type of screw, they just go over to the area in the factory that make it, put an order in, and they get like they'll go through 5,000 a day of these things, and we'll put an internal order in of 10,000, and it's done, and it's made within 2 days. It's people don't understand with the Chinese. They're just so efficient at doing stuff, and I thought it was the Japanese that were smart, but the Chinese were amazing at this. It was just amazing to watch, and it's all done all in one big. It's considered one of the biggest factories in the world, and it was amazing. And
yeah, but I could see the factory being distributed all over the place, and people just making different parts and pieces, and it gets all put together somewhere else, and it goes somewhere else in the world. It's
well, think of it this way, where you get the space shuttle, or no, actually, the International Space Station, and now or I think it's also the space shuttle program, whatever the new one would be, that now that they've built, engineered the entire craft to build it, like from these in flight, they have these 3D printing machines. So if they need to create a part while they're in flight, they can actually print and create the part right in flight while they're on mission in space. You know what I mean? It's not like they're gonna have a courier service from UPS to ship it up to the International Space Station, right? Like they will they will be able to print it on the spot. It's amazing where they're at. Just amazing. So I'm not.
The secret is to have it be small and light.
Yeah, well,
So you can ship it.
well, it's small because it's plastic, and they can make it. I've seen these machines. I don't know if you ever go to the market maker festivals. They'll have a couple of guys there with a machine. They'll print out a toy soldier, a car model, or whatever for little kids, and these
Oh yeah.
amazing technology, just amazing. But for the for the factories, or let's say the space program, it's genius at where it's going. You know. So there's nothing like right now. You're trading off a Tradestation still, or?
Well, right now I'm not doing much trading. For mostly what I did was helping other people write software for Tradestation so they could.
Oh, I see.
From that standpoint, having seen like several different people, what they would use for trading and what they do, it's a very fast moving field.
Yeah.
There is really not much privacy involved.
Yeah.
The algorithms get spread around rather quickly. In fact, the code gets traded on the forums, and basically pieces of snippets of software get cut and pasted and modified. It's writing something entirely from scratch is not the way it's always done.
Right.
It's some sort of like a DNA that gets morphed together with other DNA and makes some new creature.
Yeah. No. Yeah. Well, that's now, but just from Tradestation and those kind of software platforms, do you think it's as big or even bigger now than, let's say, 5 years ago, or even 3-5 years ago?
Well, yeah, it's a lot. All of this is bigger than it was years ago, but I'm not real sure. It's not transparent to what goes on the other side of your screen. A lot of people. One guy I worked for, he was in hedge funds and said that a lot of people that are into intercepting your data.
Yep.
And
the trading logic and
if
the rule.
if your account activity is greater than $1 million, they'll put a person on you to watch you.
Yeah, no, this is interesting, and that's all on Tradestation or anything like Tradestation.
Anything, it doesn't matter.
Really, because this
is at the broker end.
Yeah,
like Tradestation has a brokerage.
That's right.
Ducascopy has a brokerage.
That's right.
There's some software that's like I'm just trying to think of the name of it right now. It's not MetaTrader, but there's another one that's all forex.
Yeah.
That is it called MetaTrader?
Maybe MT4 or 5 MetaTrader.
Yeah, MT4 and 3, 4, and 5. Yeah.
Right.
But that may very well not be
private.
Private.
Yeah. Well, here's the thing. Okay, so let's say it's one of my strategies. It's all done in Java. So let's say my typing's awful on Mondays. Give me a second here. So here I have, let's say, any of these strategies, the socket client, or the socket strategy. So if I run this, see it's in local run. If I just run it. So what happens is it's now connected in J4X, right? So what happens is when you look at any of the Java file right here, it will compile on the fly to this JFX. So the question is, I really don't think Duca's copy does this. But the question is, if I embed my trading logic and my entire strategy in Java, embed it right within JForex, and press run right here, does that mean then that transmits the code over to their server as well?
I doubt that.
Well, I don't know either.
At the same time, if you monitor your
The network,
your all the packets that you send and receive, you might they may just look at your orders, or they may look at more than that.
well, the thing is, I think my approach with Duca's copy and any of these kind of brokers is I have this strategy, but the only thing I'm going to do coming from within Duca's copy, the JForex, is have the file, like the platform, dump the data that I want into a CSV, and then have my Python code look at it, analyze it, and then make the trading decision, and then send back the order through sockets back into the JForex. So what I'm doing is I'm taking all that trading logic and I'm offloading it onto my own on my own source code. So the only thing that Duca's copy or JForex will transmit is just data and the orders, and that's it. Because I think if I built a strategy, I'm not saying Duca's copy, but whatever broker, if I build a strategy in one of these Java files, and I put in there in using their API, setting the target of the stop loss, they're gonna know that, right? And they're gonna have also they're gonna also have they're also gonna see the strategy run, so they'll be able to set their market making software to reverse the trades and the buys and the orders, to be able to manipulate that to skim off of my trading opportunity. You know what I'm saying? And I wouldn't know.
That's quite true. I think that that high frequency trading has rendered the whole thing moot.
Well, that's what they. Yeah.
Yeah, because of the latency problem, requires a very short time. So you have to have your software, your algorithm has to be co-located with whatever exchange that it's working with.
Right.
You know, in order to get in line for your limit orders.
Yeah.
And the fastest way to execute is to have orders for several contingencies and cancel the ones that you don't want and leave the one you do want already in place.
Right.
And then they're talking about eliminating the ability to do that because so many people compete that way.
Right. Well, and it's not just that. It steals the opportunity for little retail traders as well.
Well, it becomes meaningless for retail traders.
Yeah. Well, you're essentially fighting for crumbs while the big HFT operators get, their orders moved ahead, and they also literally clog up the pipeline of other fake orders because your order is going to compete against those fake orders. You know what I'm saying?
That's right.
And
it's a matter of saturation.
Yeah, exactly.
It's like a denial of service.
Yeah, in a way, because
it's really what they do for a living.
Well, I do know that in fact that the CME does that, because if you're paying by access, you're paying for access into the CME. So when you put your order in and you're paying, let's say, $1,000 a month, you have another operator that's paying $5,000 a month, and both our orders are going in to compete against the same pricing engine and the same matching engine that CME is using. Who do you think is going to get the higher priority orders? It's going to be the guy that's paying the $5,000. So I know that that's happening on the CME, and a lot of people don't know that your matching engine at the exchange level is measured by what you're paying to the CME to get access and getting your orders at a higher priority. So you want your order to get executed faster and filled faster, you have to pay for that service. You know what I'm saying? So that means that your order go ahead.
So you have to have a different time horizon to participate.
No, I'm just saying, like the exchange will have a pricing matching engine on your asking your bids, right?
Yeah.
So they're running that technology that will match those orders together, right? So when you have, let's say, two orders come in, one from me, the high powered HFT operator paying $5,000 a month, you paying the 1,000, the retail trader, a month, and I want to get my order filled faster. Mine will get ordered faster because the pricing engine and the queuing of those orders as they come in, the matching will fill the order that has the better access into what people are paying the CME who's running those matching engines.
Well, I mean, that stands to reason because they make their money off their fees.
Well, not just the fees, but that's how they. It's a menuing option. So if you want better access in the pricing engine, you have to pay for that. And obviously
but I'm saying that's the service they offer. That's
right.
They're offering you quality of service for money.
That's right.
And that's how they make their living.
Well, not just that, but they also
very, very tiny commission. But since they do all that business, it adds up.
That's right. And then there's also the market making side of it as well. Plus, they lease out the liquidity providers that are really the market makers, so they'll get the rebates. So they got the whole game rigged, really, and everybody's got their pockets being filled before the little guy, like the retail trader, has any opportunity. Because I know if you go through Oanda, whoever, they're just a broker and they have enough clientele to do their own matching and market making within their network of clientele. But yet, when they have to step out of their network or their market, they have to step out and then go to their prime broker and operate no different than a retail trader in that market, and they're competing against the big banks like the UBSs and the U.S. banks, and
and the big banks can get their clock cleaned too.
Well,
they have to come with their hand out to the government.
Well, yeah, the sad part is that it's been like this now since 2008, and I would think if they would regulate it, it would have been regulated by now because so many people. Well, the little retail guys are getting hurt by this so badly.
I think that a lot of the issue is the segregation of accounts. Back in the 30s, they had the Glass-Steagall Act.
That's right.
And then it got basically nullified in Clinton's administration by the Graham-Leach-Bliley legislation. And then they haven't put it back. It's the current structure is just a whole bunch of special favors that are negotiated between lobbyists and legislators.
Yeah.
And they're allowed to basically make the money you put in your bank account theirs, not yours.
Well, like we can love him or hate him, but I do know that Trump has just brought in an exact law to somewhat prevent that, because it used to be if you were a lobbyist, and you're coming out of the Congress, they put, I think, a 2-year moratorium on you. Now it's 5-year.
Right.
So because now you have a 5-year, you're not really as worthy and valuable to a lobbyist anymore because you don't have the connections. 2 years, yeah, maybe, but not 5.
True. The old saying is "who you know, not what you know."
That's exactly it.
And the reason that there's so much hatred against
the banks,
Trump,
yeah,
or against Bernie. I mean, the thing that Bernie and Trump had in common was that they were going to give a finger to the good old boys that had stopped Glass Steagall and all that. In other words, the fact that it's who you know, and a lot of people are making money by being middlemen. And the process that's happening that Trump wants to do is disintermediation. That is cutting out of all the middlemen that have created all these distortions in pricing.
Well, I would have thought that for sure was going to happen during his campaign. But look at the guys that he brought in his administration. Mnuchin, he brought in Gary Cohn, who was co-chair at Goldman Sachs, and nothing has changed.
That's pretty obvious. I guess
changed.
It could work either way. It takes one to know one.
Well,
you got to hire a thief to stop a thief.
Well, yes and no. I just don't think this is my
That's the philosophy that's happening.
I don't think it's that. What I see, looking at Trump and how he was gonna, like, quote unquote drain the swamp, I do look at that going into the campaign. The election happens. Give it a month and look at the guys that come out that are part of his administration. They're not there draining the swamp. I think this is now conspiracy theory that I'm thinking, that this is the powers to be that are actually running the U.S. government saying, no, Donald Trump, you're going to get this guy from Goldman Sachs and this guy from Goldman Sachs because we have a relationship with Goldman Sachs that we don't need the public to know. So therefore, you're going to bring in these guys. They're going to get paid off, and the guys that are running this is the CIA. Because I watched a video a few days ago from a guy named Chip Tatum, and it was fascinating. And I'm not usually a conspiracy theorist or anything. I find it entertaining. But the thing that I really thought was really interesting was this interview right here. This guy, the Black Ops interview, he was a guy who was flying the drugs with Ollie North back down to wherever in Central America. This was the pilot that did this. So then he started speaking out against the CIA, and he started in the Vietnam War. So he was under service with the CIA for 25 years. And then he suddenly became a turncoat against the CIA. Then he started having to file going to court to defend himself in Florida. And then right at the end of the video, this guy, what's his name? The interviewer, I can't remember his name, goes, "How do people know that you're not BSing?" And then this Chip Tatum goes, everything what we have is on record. It's a public on record. Everything that he's declared, and this guy he would document all the manifestos of the flights that he would with the drugs and the guns. He maintained his own manifesto, and he used it as a form of insurance if something went on with the CIA where they went against him. So he threatened to basically put out the manifestos in a report and put it online. And then back in 2007, he disappeared. This guy, Chip Tatum, and his body was found on the beaches in Panama, and they literally burnt off his face.
Oh, jeez.
This is the brutality of the CIA. And he talked about Wall Street and how there's the connection between Wall Street and how there's the financing going on between Wall Street and the CIA. And I thought that when you watch Alex Jones was all BS. But when you watch this guy and they go, oh, but it's on public record, it sort of really, to me, it seems to really legitimize his claim. You know what I mean?
And yeah, I can see that. You know, I think that what they call conspiracy allegedly was something that the CIA explained to everybody that that's what it is.
Yeah,
But really, it's just teamwork. It's
well,
competition
yeah,
and teamwork.
exactly. But the
And
thing,
the higher levels, but if you look inside the CIA, there's going to be all sorts of groups in there that
yeah,
have different varying opinions.
yeah,
And they probably have to argue with each other whose opinion is going
yeah.
to is going to be operated with.
But look at what Trump was doing, and who the guys that he brings in his administration, and look at him having to go, maybe, I don't know, maybe to grovel in the CIA, do this ceremony, his very first speech as a president in the CIA. And I really think you watch this video and you think about all the dudes that Trump has brought in, and you watch this video and you go, maybe it is possible that the CIA or whatever groups are really running the U.S. government in the shadows. You know what I mean? I don't know. It's
Well,
just,
I
it's
think that's
fascinating.
true. I think that well, they have to because they don't want everybody else looking at what we're doing.
Right.
Because it's like well, let's say if we change the rules of football, and when they have the little huddle before they hike the ball, they broadcast the play on the PA, so everybody knows what the play is going to be.
Yeah.
If football wouldn't be the same anymore,
Yeah.
would it?
Yeah. Yeah.
They get into a huddle and they whisper little secrets, and this is what the play is going to be. And if somebody guards so and so, instead they're gonna pass it to somebody else,
Yeah.
and so forth. And then they do the play,
Right.
and this thing repeats over and over and over again. I would call what they do in the huddle a conspiracy or a plan, or what the coaches do is teach people how to plan their strategies,
Mm-hmm.
and the whole thing is just the same no matter what scale you look at it.
Yeah. Well, it's fascinating how you compare it to football, and here we're talking about strategies and letting know the broker the play through the file of the Java file, and that we don't know if we're actually submitting the trading logic or whatever else to Duca's copy, the broker, versus, well, do we have the trading logic in another file? You know what I mean? It's the same sort of kind of concept, right?
Yeah, there is. I mean, if you look at what a neural network does, at its most basic form, is trying to figure out what's happening by mapping what data goes past it to the result.
Right.
It tries to at least take the input data and duplicate the result. It tries to make a model. Right. By adjusting itself.
Right.
And so by just watching all the orders that come in, you can create any number of algorithms that anticipate what's going to happen based on the experience in the past.
Yeah.
As long as you have control of all the data.
Yeah, and that's what we talked about.
And also, you know who is trading, and in all the exchanges and brokers, they know who's doing what trading. They can they can just recognize a trader or an account by the way it trades.
Yeah, that the sad part about it is,
what does it respond to? What happens to the prices that make an order come through?
Oh,
That's
totally.
all they have to know.
Totally, but the sad part about it is a lot of people don't know that potentially, not all, but potentially,
and they know at 40 milliseconds in advance,
right?
To the thing about flash inspection of the order,
right? But the sad part is that a lot of people don't know that brokers do this. That's the sad part. They just willy-nilly put up their strategy and let the broker get access to it in the code. That's how.
But if you trade on the geopolitical aspect of it with deep enough pockets, you get rich.
Well, that's what also we talked about.
Both things are two on a different time scale. They can't be anticipated the same way.
Well, that's what we talked about earlier. Exactly.
Yeah.
Here's your calendar events, and you can basically trade off of those. Exactly like that. Japanese auto exports. Yeah, of course, there's a market opportunity right there, and you have a whole calendar full of stuff. This is market moving news,
Yeah,
which means that
yeah.
will affect the yen.
I had a buddy that worked for Bank of America.
Yeah,
He's was in the consulting company I've been working with for, I don't know, 20 years, and well, I don't always. I mean, I'm not always don't always have a job. The last job I had was making a gas detector, um, um, electromagnetically compatible for import into Ireland and, or
right.
into Europe, because
Yeah,
they don't like, they try to bar you from importing things if they can cause it to be disturbed by bombarding it with 0 to a multi gigahertz radiation.
right,
It has to be shielded.
right.
So anyway, he worked for Bank of America. He says, well, everything, all their software was secretive. It was all done in Unix, and it was all news driven.
Yeah, there you go.
And he said the work environment was terrible because of the competitiveness and secrecy and backbiting, and just the whole environment was crazy.
How long ago was
This
this?
was 20 years ago.
20 years ago. Yeah, yeah.
This was back in 1999, 2000, 2001, back
Right,
then.
right.
So what's it like now?
All right. Well, we talked about that earlier, but in terms of morale, I worked at the CPBIB, the Canada Pension Plan Investment, because they have their own trading desks, and it's a little more collegial. But let's put it this way: it just seems to be this environment of paranoia where people don't openly talk to each other, and it's very quiet. Um,
Uh-huh.
and for me, I don't work that way, and I'd rather be on the outside doing what I'm doing now and doing exactly what I'm doing with you, talking to a guy like you about trading ideas, and the person before you, we talked about other kinds, and you just bring it all together and you try to make a whole community around it, and that's what's kind of going online now. So I'd rather be part of something like this versus working in these environments that just, I don't know, they just seem to suck the soul out of you. But on the other hand, you have to respect that these employers, they got other big competitors outside of their own bank, so they do have to be secretive. They have to.
Oh, I know.
They
I
have
think
to.
it's a. You shouldn't call it conspiracy theories. It should just be called competition.
It is. Well, that's what it is. Yeah.
But then you have the issue of scale, where you have cottage industry versus economies of scale.
Yeah.
Those are two strategies that are very, very different, but both of them can increase efficiency.
Yeah. Well, we already talked about that with the 3D printing versus. Yeah. 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 I hear what you're saying. But with the cottage industry, I think learning from talking to the previous person that what I'm learning from it is that a lot of these banks, and I can even speak from firsthand experience, what I'm finding is that the staff from these banks and hedge funds or whatever, they'll go outside of their little employee network, and what they'll do is they'll go to meetups, they'll go to whatever events, they'll come to a site like mine, talk to whoever, they'll get trading ideas with that person that may work at another bank, and then take that idea or that feedback, go back into their work environment and pretend that they're the hero with this new idea, and yet everybody's doing the same thing. You know what I mean?
Yeah.
And I think there's just a form of that. What I found interesting about what you were saying about Tradestation, though, is that if you got a person that puts up a piece of code onto a forum, and then you're going to have, let's say, a couple hundred people download it, copy it, and implement it, um, obviously that's going to make that strategy pretty well worthless because now, let's say, 300 new people are doing the exact same thing. You know what I'm saying?
Yeah. Well, I mean, there may be several thousand things being done, but it's probably possible to recognize when those things are operating.
Yeah, well, they do.
The whole phenomenon of support and resistance is pretty obvious if you uh, work with this stuff.
Yeah.
You can almost you can watch these charts and the prices go right to the lines you draw on the charts and turn around.
Yeah.
And and if you you optimize an algorithm, you'll find that 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 they converge to those.
Yeah, that's exactly. But this is why learning from more of the big trading gurus like Warrior Trader that I've been watching, he says he looks for not just trading opportunity with his day trading, but he has a criteria where he's looking for trading ideas that nobody else is actually going to use, because then he's got um, better opportunity because there's less competition for that trading opportunity.
Oh,
So
I think that's a good strategy. I mean, that's a good basic point to work from.
yeah,
You should probably take that into account. That's a trade-off between that and liquidity.
and volume, and that
Like highly liquid things that are traded have a different behavior pattern from things that are less traded and therefore not as followed by algorithmic traders because they just
yeah
don't they just don't have the stationarity.
yeah
They're for one thing one day and then something that's not traded very often. There's no tiny amounts of frequently occurring events to develop a statistical algorithm to trade on.
yeah because that's what I'm thinking if when I move into options, because I've talked to people and asked about their watch lists and how many assets they'll have or instruments they'll have on their watch list. Because everything's all automated, they can maintain 300, 400, 500 instruments on their watch list. So if they know that there's an event coming up, like here in the calendar, that nobody most likely won't know, you could set your trades around that, and you're watching it anyways. You can move your capital into and line up that trading event, put on those positions, and with the hope that nobody else is watching that same asset. But that's why I like options a lot, because there's literally thousands of options out there. But the problem is, it comes back to volume. And the way I'm looking at it now, reading the Bloomberg news every day, and seeing how money flows from one asset to another, it's all driven by the volume. Like the volume is the big, and if it's a market moving headline event, then not just will there be higher volume, but there'll be also the spread of that trade just is even wider. Obviously, that means potentially
Right.
higher profit. So I'm thinking, especially on the Forex side, I'm looking at ways to look for these calendar events and correlate them with what I'm seeing on Bloomberg, and then trying to figure out where those maximum returns will come. So what will happen is, if you look at your calendar event for, let's say, the next few hours, the next day, or even the next few days, that you could probably set up your trades based around that, but you also hopefully will have the historical patterns of past similar events and be able to calculate potential profit potential on those potential moves. That's what I'm thinking. And not only that, but we were talking about it an hour ago, and I asked about the back testing versus stock simulators, where everyone in the world basically focuses more on back testing, but usually the back testing results don't really match up to what really plays out in live markets. Whereas if you have a stock simulator and you set up an environment of, let's say, market makers, retail traders through an simulated exchange, through a simulated broker, and then just set up some mock trades and have that just randomly play out against your live simulated strategy. It's a better way to simulate how realistically your performance will be for that potential strategy or that potential trade. I think from my perspective, that's a better way to attack it versus then just relying on back testing. That's
Yeah, I think that's an advantage that the foreign exchange system has, is that you can have trade very small lots and run in real time with real money.
right, exactly.
So that your orders really are at least put through a facsimile of real trading.
Yeah. Well, the thing is with in here you have in Duca's copy. It's very powerful. I haven't tried it out yet, but you have the ability just to pick off any currency pair you want, and then just click download, and boom, you have it. And I don't know how far back it goes, but to have this kind of capability is very powerful. And then just run simulations against each other and looking for patterns and potential correlation on new trading opportunities, looking at your calendar event, your economic calendar like this, and look at them all. Like there's literally like dozens upon dozens of events that you could potentially simulate off of. That's the way I look at it, and I'm basing that around learning. When anybody asks me about how to get started in trading, first place I tell them is just read the Bloomberg news every day, and read it for 6 months or even a year, and then you quickly understand where the patterns are. You'll understand how if this trader, this bank says we have a possibility or the potential, the forecast of this happening in 3 months from now, and then you go back to it to test all that out. I think it's a great way to learn how to trade, because what I'm seeing is that maximum performance is always built around what you hear about in the news. It's nothing else. Like trading statically the U.S. and the Chinese yuan every day is just that. It's static. So you're allowing your capital to be tied up in those currency pairs. But from my perspective, I'd rather put my capital and allocate it to an opportunity where I know I'll get maximum return on that opportunity. That's how I look at it, and that's why I'm starting to really throw out all this quant stuff and all that, and just look for potential trading opportunities that will give me maximum return for that trade. Because if I only have $100, I don't want to trade, just statically every day the U.S. dollar and the Chinese yuan, because I'm only going to get a small pittance of return. Whereas if I only have $100 but focus on that $100, where do I put that $100 to get maximum return and trade like that? You know what I'm saying?
Yeah.
And that's how I'm.
That's an alternative strategy, and I know that some people will say, "Well, stay away from the news times and trade where things are more stationary."
Mm-hmm. Yeah, but there's.
And then other people will say, "No, we trade around news events because they offer a higher potential return."
Right. Exactly.
If they understand what's happening, if they have some insight as to what's really going on, other than just the numbers you see when the prices move.
Well, I could see the institutions trading like the static way, because they have a very low risk tolerance, because they need to hit certain targets at an institutional level. But that's the advantage that we, the retailer, us, the independent trader, don't have that limitation. So we could go in and trade like we're in a casino. But the cool thing about it, and I can't say, what's that?
So you are in a casino.
Well, you are, yeah. But the thing is, with a casino, you're basically trading blindingly, because you don't know the outcome, or you don't have enough data to figure out what the outcome will be. But in trading, specifically maybe forex And options, you have a lot of data that you can work with to circumvent that risk that will be on your
That's true.
downside.
That is a difference.
You
And
don't
of
have that
course,
in a
there's so
casino.
much data, and there are so many different ways of looking at it that that it's not. It's well, I'm not exactly sure how to describe it, other than that it's so diversified that the different strategies are favored at different times.
Well,
They
that's
call that a regime change.
right, but
Because
you
whatever the circumstances are, it favors different strategies at different times.
right, but that's what I've learned from the Bloomberg News is because, I've seen returns of, let's say, iron ore of between Australia and China. You'll get a 25% return over a month, and I can guarantee you I can time that trade will happen and that return will happen. Why? Because you'll see the Chinese PMIs are on the upswing, so they're going to start putting orders out for iron ore, and that's most of it going to come from Australia. So that if that you put a future trade on the iron ore, that's one trade. Then you have another trade of maybe trading the like some kind of ETF that focuses on Chinese manufacturers that use iron ore. That's one trade. Then you also have another trade of the relationship between uh, China and the Australian dollar. So you have like three or four trades that you have right there that you could put on just based upon two data items. Chinese
That's right.
PMI's up, and they're going to put in a hard input order for iron ore for about 75% of their product that they're going to manufacture for the next quarter. And it's the same thing when you watch oil as well, because oil is such a huge baseline commodity. I mean, it's just you watch for those events. Not just that, but you try to understand the trading relationship between those two countries. On top of, you try to understand the foreign exchange between those countries, and not just that, but you can also watch companies that will put oil as part of their I don't know if value chain, and be able to trade around all the companies that are involved as that part of that supply chain. So if you're going to, let's say, steel's going to go up because the economy is going up. So GM knows they're going to want to manufacture more cars. So the iron ore is going to go up. Steel's going to go up. GM itself is going to go up, and all the companies that play along that supply chain are going to be positively impacted from that one news event. And if you understand
Right.
those patterns,
Plus, the time scale is different from high frequency trading.
that's
So
true. That's true.
it's
That's
somewhat
true.
independent of that. It's a
That
different
that
venue
I
of
agree.
trading.
I agree. But when it comes to these news events, so if I know at 15 o'clock, better one. Let's say Polish finance minister at 14 o'clock Swiss time is going to announce an auction on whatever, and I know at that time, and I'm doing my forecast on the economy or something going on in Poland, I can maybe forecast a trade off that, and that's definitely an impact that will have on what my data tells me. Then that's on a sub-second level, and there's all these different events that you could go with. And if the bigger ones, like the U.S. Treasury, is going to be a big one, right? Because of the volume and liquidity on those events around the U.S. Treasury. So that will definitely impact the sub-second or minute level time frame for sure. Um, and if you have the right call, you're gonna get a nice pop of maybe 10-20%. And if you do 5 10 of these a day, all you need is one or two winners to offset the losers.
Yeah.
That's just my approach that I'm looking at, because I'm sure a lot of traders do this, but I think there's enough liquidity to go around for little guys like me. Like here, I just saw crude oil, American Petroleum Institute, API Weekly. Let's see, what's it called? Yeah, let me. I'll get this. There we go. Almost had it. There we go. Okay, so what are we dealing with here? I don't know what this strategy is, but you could tell that that's going to be an impact, U.S. dollar, definitely on other relationships as well as in here. You could just put on trades right here, Brent oil and light crude right there.
Yeah.
You know what I mean? So
yeah, that's interesting. It's too bad that we can't get in there. Well, they do contracts for difference, so we can't. The Americans can't get in there.
No, every broker. Go ahead.
Well, I don't know of anybody that allows the U.S. to trade contracts for difference.
Oh, I don't know.
And that's what some of these foreign brokers do. So that's one of the reasons that you don't trade with Dugascopy if you're in the USA,
right?
Because they don't allow that to be those trades to be done.
So I didn't know that.
Trump might change that. He might say, "Oh, well, we'll get rid of that regulation. We'll let you do that."
That sort of reminds me like the pattern day trading rule, where we're going to protect all the retail traders and protect them from themselves, and now you have to have 25 grand to be able to trade the small little. That's right. That's sad.
That made it just go bye all of a sudden. I'm watching and waiting with bated breath.
Right. I don't know.
And also watching with bated breath for high frequency trading for these people to just burn themselves out. One guy I programmed for, he is friends with a whole lot of hedge fund people, and over a period of a couple of years, the profits of these hedge funds just went down.
That's right.
Because the whole concept of high frequency trading had a rapid rate of development that was largely based on getting in the queue ahead of somebody else.
That's right.
Or being able to cancel faster than the other guy.
Yeah.
So that he got stuck with an order that he didn't want instead of you.
Right. Because, though the markets have gotten so efficient that the opportunities have been whittled away because of HFT and other algorithms. And it's harder and harder to find those opportunities, I find. And even if they do
opportunities based on racing to the right spot in line.
Yeah,
it's just like having a team of guys who go into a store or go into a bank and waiting in line, and the first person that gets to the teller they all rush over there. All their buddies run over there and say, "Here, do our business," and then you beat everybody else.
Well, I don't know if you saw this story. I put up, I think it was last week. This really killed me. What was going on in England? Let me just find it. This was amazing. You know the London Shard, right?
A little. I don't know much.
Well, you know what it is. That's all that matters. So this company, I don't know which one it was. I think it was Jump Trading. They put a council into a council. What they did was, this is kind of funny. These traders, I think it was Jump Trading. What they wanted to do, they wanted to build a tower just as big as the Shard.
Oh, I see.
And they wanted to be able to transmit their orders and their market data between Spain and England. So they wanted to put up this new tower that was as tall as the Shard, which is the tallest building in the UK. And all these council members were all on an uproar over it. But they wanted to get advantage over everybody else, so that they can get access to data coming out of, I think it was Spain or mainland Europe. Yeah, it was Jump Trading that applied. And it's getting to that level where they're trying to build higher towers than the next guy. I mean, it's amazing.
Well, it's just like the old days. They used carrier pigeons.
Well, it's right here. UK tower, this one right here, between Europe and the 320, because it's taller, So they'll get optical line of sight versus
Right.
radio line. I mean, it's to that level of desperation to get access and speed faster than the next guy. That's absolutely
Well,
insane.
once that's reached, then I guess you're going to need quantum teleportation or something.
Well, I remember there was a joke of with machine learning, you type in a question and it gives you an answer, and it's going to get to a point where the machine's going to already give you an answer before you ask the question. So it's probably going to get to that level.
I've heard the story of how Amazon supposedly knows what you want, based on your history, browsing history.
That's
so
right.
they know what you're likely to order.
Same with YouTube.
And that has some merit, but they still can't. They still don't. They're still not. They can't really know for sure what you're going to do in the future.
Well, the thing is like when I'm on my iPhone and I'm using the voice recognition, and you start speaking, and it calculates and guesses what you're about to speak.
Yeah.
And then what I notice is that it will go ahead and put in like 2 or 3 words, but as you speak the farther word, like the further along words, it will automatically correct what you already said. But there's a part of it was trying to guess on what you're talking about, and usually at least 50% of the time it's wrong. So
Yeah.
Imagine you have that kind of machine learning and applying it to trading, where if you're telling me 50% of those guesses are going to be wrong. So it's to me, using that kind of technology for voice recognition and the linguist, it's more useless. It's more useless to me than useful, because like I don't want to work with something that's giving me 50% error, and then have to go back in and correct it. You know what I mean? And I could see here.
Right.
Go ahead.
Well, our smartphone for texting gives you options, and if I'm not much of a texter, but I can text almost faster than I could type sometimes.
Yeah.
If I know how to guide its little algorithm by speaking in a way that it recognizes.
Yeah. Well, the thing is with
typing in a way that it recognizes.
well, it's like you go on to YouTube and it tries to guess. Like if I watch this video based upon the cookies, it's going to try to give me suggested videos I'd be interested in, and some are.
How fast can you get a Linode SSD server up and running?
But the key is that a lot of the time it's wrong. You know what I mean? And if you try to apply the same logic to trading, what's the percentage of its words going to be wrong? You know what I mean?
Yeah.
That's my issue. So that's why I stick with the macroeconomic and fundamentals, because it seems to work. It's the most reliable way to trade. You know?
I think that's it's like the tides. It's
like
a better time scale to operate. It doesn't have a limit like high frequency trading. There's a limit, which is the speed of radio.
Yeah. Well, I know the guy, the Minaj Norang, what he's done. He was one of the first HFT firms, TraderWorks. And now he started up a new firm called Mana. And what he was saying about 2 years ago at one of the Bloomberg events, he says that high frequency trading will no longer be about it'll be not high frequency, but it's going to be, they're going to be analyzing slower moving data. So instead of holding positions for like a second or 2 minutes, they're going to start holding on to positions for much longer periods, like a week, a month. And that's what he's saying, that the next trend will be, is that instead of us going after the high speed stuff, it's going to be holding on to positions longer and hopefully getting the higher return on that, as you said, time horizon on that position. So.
Well, yeah, there's in other words, the price fluctuations are driven by events that do have a momentum to them.
Yeah.
They're large enough in significance that it's more driven by how quickly people recognize what's happening
Yeah. Yeah. Exactly.
at a political level,
Yeah. Yeah.
or on a business level, like the need for a certain resource.
Yeah. Yeah. No. Well, it's the same concept where the institutional traders know exactly an event that's going to happen because they have certain access to data, or they're watching data that most other people will not watch, and then they'll put the position on, wait it out for 30 days. The position then gets to a point where it's profiting, and the typical retail trader guy who's chart watching will go, oh, here's an opportunity, I'll get in at that point. And then that's when the institutional guys will get out, because they already know that the dumb money, the retail money, will get in like a month later. And that's how a lot of the institutions trade, um, especially when it comes to macroeconomic uh, data. And that's how a lot of the macro event hedge funds work, because they see stuff 30 to 90 days ahead of the retail traders that are chasing opportunity, really, where these guys, the institutional traders, are actually forecasting what's going to happen in, let's say, 60 days. And then they use the dumb money as a liquidity to get out, which is
Yeah,
brilliant.
I think that's the way it's worked for a long
It's
time.
always worked that way. And that's why there's the smart money and the dumb money in Wall Street, because it's the dumb money of the retail traders that all they're doing is just sitting there every day watching charts. Every day they're using these weird technical analysis indicators that probably don't work, and they think that they will. And I've argued with a lot of them, and you know that's just the wrong way to look at the markets, and they lose because they're just chasing after the opportunity. You know what I mean? But that opportunity is already come and gone, or at least the maximum potential of it has already passed. You know what I mean?
Yeah, I know what you mean.
And
I mean, I've seen it over and over again.
yeah, but the institutional guys are always looking for those opportunities that they know will form within 60 90 days is usually the horizon that they look at, and they put trades on now, and then they'll let it ride. Because I knew back in February of last year, the markets were turning in February 2016. Now I was in California at the time, and I could have made those trades, and I didn't. But I saw all the way from February till about April, May, the markets went up at least 20%. And they were saying at that point in mid-February that the markets would have a good run, and it happened. But nobody forecasted what happened with Trump in the election, and had a 15 or another 20% run. You know what I mean? And now all of a sudden the retail traders are all excited, and they think it's a rally, so they get in now. And then in the last week or two, it's just been flatlining, and actually it may have gone down. But it's the dumb money that goes in now.
Quite a bit, but it's we're at resistance, of many forms. So yeah, you can see the selling come in whenever it comes to there's several different price levels for everything that where there's obvious resistance,
Yeah.
and it seems to be. And then when the market collapses, there's also resistances or supports where the market will bounce and then go lower after that.
But the funny thing that I've been watching with the Bloomberg News is one of the indicators they're using. There's actually two that nobody talks about in the technical analysis world. And this is when it comes back to the data, is that you can use open interest on an option, whereas if you know that open interest is high, then that means that there's going to be a play and an opportunity forming at that point once the open interest spikes. And the other one that's been fairly new that the analysts use is ETF inflow and outflow. So if they know there's an inflow of, let's say, gold, then they know that that is definitely a call that they can use to forecast even probably next day or 2 days from now, that the market will dip, and that's what they're using now as in ETF inflow outflow, and they use the typical, you know about the COTS, right? The commitment of trader reports.
Right.
Yeah, they use those still, and they watch what the institutional money's doing. And what's the other one? Oh, and just basically watching the shorts versus the longs on certain assets, and that all that data sits in option data, and nobody looks at it. It's amazing, but they'll blow their brains out to build a machine learning algorithm to watch a price line. I mean, I don't know, that doesn't make sense. But if you have a machine learning algo that will watch that other data that I mentioned, the option open and open interest is a good one. ETF inflow outflow. You could probably get some nice forecasts out of that using machine learning, right?
That's true.
And that's what I'm saying is that the data does not lie. The data cannot be manipulated, and it seems to correlate quite nicely a day or two later on what is actually happening in the markets. And I only learned that watching the Bloomberg news. And there's a few other ones that are quite interesting too. They're starting to use RSI now quite a lot. So there is some technical analysis that is useful, but it has to be used the right way and interpreted the right way for those market conditions as a way to forecast those trading opportunities. And they seem to be pretty good that I'm seeing through the news. And it's a fascinating way to analyze the markets. And I was telling the earlier person about watching the hot money flow, because there the spread, the opportunities goes up usually 10, maybe 15, 20, up to 25% in a matter of like a day or two. It's an amazing return. And I'm thinking I'm gonna try to analyze data on that and try to maybe forecast off of that and make trading calls off of that instead of the traditional, like technical analysis way we do it, or other quantitative ways. You know what I mean?
Yeah.
So that's my approach over the next few months. And the big markets where you get that is in the forex a little bit, but a lot of it's in this economic calendar data, and then also in the options data. It's really impressive what I'm seeing, and I'm probably going to take a stab at it and see where it goes, and watch the supply and demand of certain commodities. And I've learned a lot over the last 2 years on analyzing the markets that way versus, as I said, watching static data, like just a price line of something, and watching that every day and trying to forecast off of that static piece of data. Like there's a lot more to it than that, and there's other data that impacts other data that will impact your trade. You know what I'm saying?
Yeah, that's true.
So it's looking
And
for.
also, what influences what changes from time to time.
That's right, but you only will see it when you you read the Bloomberg news every day, consuming it, and not just focus really on U.S. Let's say, because right now I could go in and watch. Well, you can see it right here. All the stuff that's coming out of places like India, Japan, Hong Kong, and it's a global thing where these markets can be impact the momentum going into the U.S. Or I definitely know that what comes out of the U.S. like at 5 p.m. New York will definitely impact how Asia will open in the next few hours. I haven't seen yet where the Asian markets will impact what happens in the U.S., and it's very rare, only under very extreme conditions where the market really starts to turn down, and then it will impact Asia, and then it'll cycle back into the U.S., and it'll just feed itself into this like panic mode. And that's the only time I've seen it where whatever happens in Asia will impact what goes on in the U.S. But I have
I've
seen.
seen what happens in Europe impact what happens in the U.S. too.
Well, yeah, but it doesn't like. All I'm saying is the influence of both Asia and Europe does not impact U.S. all that much. But what comes out of the
Uh-huh.
U.S. will impact what goes back the next day back into both Asia and Europe. Like U.S. has a much bigger impact than what's going into
Uh-huh.
Asia and Europe. But if there is, it's usually a confidence. Where if they know there's a confidence in the market, a global market rally, that will feed into itself globally. And if it's specifically more on the downside and it's like going into a panic mode, then definitely that will cycle into each day, the next day. It definitely cycles back into the U.S. market. But that's not it's not rare, but it's not as frequent as what I've seen where the U.S. will impact what's happening in Asia and Europe. Because what happens, what I'm finding is that the news and the confidence level that comes out of the results of the trading day out of New York, it does have a feed back into Asia, really specifically in Japan, and
Yeah.
then as Asia opens up, going to Korea and China, it seems to calm the markets down, and as soon as the Chinese news starts to take over, then it's more like whatever China has as news that seems to impact the whole region of of Asia, and then as London opens up, it can impact the confidence level because how Bloomberg does it, it's like you'll have the Chinese cover or the Hong Kong coverage, and then around our time, East Coast time, you'll get the Mid East will open up, like Dubai will open up around midnight our time, but then there's the chatter at around 1 o'clock for London, and it's that chatter that seems to impact what happens in London. And I'm seeing there's some kind of relationship going on. I just can't really put my finger on it. But if I was to quantify confidence, definitely there's a pattern there, definitely. But the funny thing is, for forex, a lot of people, forex traders out of the U.S. will open up their computers at around 9 o'clock and start trading forex, and they think that the opportunities are always going to be in the first hour or two New York time for forex markets, but that's a lie because if you look at the global forex market, all the hot opportunity will happen at 4 a.m. our time, and that's when London opens up. And you got to remember, the larger, higher volume of forex trading is going to happen London time. So the hot opportunities will happen at 4 a.m. our time as London opens up, and that's what I've been
Yeah.
told.
I've seen that.
Yeah,
It's
yeah.
probably why I'm not trading forex.
No, I'm not saying that, but the beautiful thing right now, when you look at this clock right here at 3:42, that's Swiss time. So because if you, I know it's not going to help you, but if you're able to work off, let's say LMAX, and they give you that mentality that you're now working off of London time, and you could build strategies around that time and automate them and let them run when you have the confidence factor, and let those strategies run as you're sleeping or whatever, and then let the system truly trade overnight at 4 in the morning. I'm hoping to do that, but obviously I have to have the confidence level to be able to pull that off, instead of holding out on what happens in 9 a.m. New York time. But that is probably a goal I'm going to probably push for on myself. I think over the first couple of weeks, I'll probably, as I develop the strategies, I think I'll um, uh, obviously force myself to get up 4 a.m. my time to set up the trades and let the system trade and watch the system at 4 or 5 in the morning and see what happens, and do that for a couple of weeks. And once I have the trust and the confidence, just let the system run. You know what I mean? See what happens. But the other big factor for me is because I'm with Duca's copy, I'm purposely saying I only want to trade in a very small level amount of capital. So if I fund this account with $100 and I lose $100, it's not a big deal to me. You know what I mean?
Yeah.
But I know myself I'm not going to lose $100 right now. If I put on a position right now and simulate it and watch it, I'll lose. If I lose, I'll lose maximum. If I put on like $1 or $2 or 2 units, I'm maximum going to lose maybe 30 cents. Whereas like all I care about right now is my trading logic. When I put up the trade, I want to see what the trading logic does. So I'll just let it trade with 1 or 2 units of whatever the cross pair that I want to trade, right? So it really minimizes my risk if it doesn't work out, because I'll only lose like 20, 30 cents. And as I'm more confident with that strategy, then I'll scale it up to maybe $1, whatever it is in whatever the currency is, and then scale it up to a small couple of dollars. So if I'm losing and I'm consistently losing, that's fine, but it's a very small amount. But the goal is here is to, as I said in that video, is to understand the logic of the strategy and understand how it plays out in real life markets, and try to determine patterns from it, and then try to tweak those patterns to ensure that I have better consistency with that same strategy the next day. You know what I mean?
Yeah.
Because there's a number of factors. Because I don't know, with this system, with this broker, I have probably 20 different cross pairs that I can play with and experiment with, as opposed if I'm only using 6 currency pairs, but expand it out to maybe a combination of 20 or 30. You know what I mean? And then just let one strategy play out on all those different combinations of currency pairs and see what happens, right? And then try to correlate those patterns against the live economic calendar events, and see how those economic calendar events impacted those trades as I put on those positions. But again, using small amounts of money and understanding that. And that's the first phase I want to put out there for the first probably a good couple of months, because I'm only really using one strategy. But if you look at this code on the entry and exit, all it really is using is a moving average and a trend line. That's all it's using for the entry. And on the exit, all it's really using is what was I using on the exit? The ATR to calculate the stop loss and the stop target or soft target, and then determine that as the exit. But again, part of that key is not to set those stop losses and let the broker know that, like, this always is going to be virtually stored in my system. So those will never get signaled back to the broker. So that way, I'm keeping the trading, the play out of that trading opportunity be as raw and pure as possible. Whereas I know that there's no way that the broker is going to potentially manipulate those trades, because they don't know the stop loss target levels that I'm putting on those trades. Right. So I'm keeping it pure. You know what I mean? And keeping that that I'm not allowing that influence to take effect on those positions, and then be able to properly analyze those trades as they play out for the day or for the week or whatever. So that's the approach I'm using, and keeping it real basic. But I think what I'm going to start looking for is the calendar events. I think that those will really drive the positions as they play out, and just using the very simple logic of the entry and exit that I described in these Python scripts. Keeping it really basic, but really looking for the patterns and trying to determine some theories behind those patterns and the economic data and the news of those economic events, to see if those really drive the pricing patterns that I'm going to start looking for, and then obviously focus on the ones that will give me maximum opportunity. That's what I'm thinking of doing in the FX. and then not only that, but you also have to worry about your risk tolerance and your risk reward as well, because one of these strategies has that built in. This socket, no, I think I have to load in the strategy. Hang on here. There's a simple strat. This might be it here. Okay. So let me run this. No, it's not. There's a strategy that I looked at from Duca's copy where it will look at the very basic take profit level and stop loss level, and then be able to determine if you want to take a trade on the risk tolerance and what's happening on the trading pattern for that pair, and then you can correlate that back to your ATR, and then you can determine if you want to take on that trade or not. Very simple stuff, but be able to do that across all the asset, all the currencies available to me, and then analyze those, and then determine which ones work out, why, and then look for the ones that give me maximum return, and then try to correlate those back to the calendar events. That's my approach. I'm hoping it can work out. You know what I mean?
Yeah.
But it's very straightforward. But it's with high scale, highly scaled strategy across all the currency pairs that are available to me, and then look for the ones that give me the maximum return, figure out why, and let it run for a couple of months, maybe a quarter or 3 months, and then try to figure out those patterns that drive those maximum returns, and then try to determine and forecast the next round that will give me maximum return. That's how I'm going to look at it, because, as I said, it's those fundamentals that drive the markets, and really the patterns, or sorry, the currency pairs are driven by the trading activity. The macroeconomic activity drives those returns. I think, and I'm pretty sure I could say that with confidence. It seems. So I don't know. So that's my approach.
That's interesting. Well, that's
Well,
true. I mean, that's what's going on.
Yeah, we'll see. We'll see.
It's trading something that really happens.
Yeah, we'll see. But I'm very happy to come to this point and really come to this level of finding this broker and really now having those capabilities and be able to start with a small amount of money and just go at it and play around with it and see what happens. It's kind of like walking into a casino, but as I said, you have better data to work with and get hopefully better forecasts from that data, and figure out the patterns that drive the highest potential returns. That's the idea. And I've got all these different cross pairs to work with, these different currency pairs, specifically the exotic ones like Turkey and South Africa, as I mentioned. So
yeah, they do tend to have a high spread. Those.
Yeah, I have to analyze those. Yeah, I do have to analyze those.
But I think that there's going to be some tsunamis coming.
Oh, well, the thing is, it's with the volatility that will drive the markets. And when you look at any asset class to be in with Trump, you want to be in the Forex, because the volatility drives everything. And if you know how to smartly apply the leverage, you could do really good. The way I look at it. I mean, I've looked at some of the charts since he won, and I've looked at the charts over the last week, and I can imagine the price moves for a day. I've seen some as high as 18%, and you get those day in and day out with those kind of returns, you could grow your account real fast. You know.
Yep.
And the nice thing with this strategy here, the exit, because it's dynamically allocating the ATR on the fly, usually the ATR that's calculated is no more than 12%. So if there is a downside and my system is able to go, no, we don't want to carry on with this trade, the maximum I can lose on each position is 12%. Whereas, you know how most humans will go, oh no, it's coming back. It's gonna come back, and then they go from 10% loss to 20% to 30% loss. You know what I mean? But here I've got that little exit there that says we don't care. The system will cut me out. It's just that's an adamant thing that the system will do. And as soon as these conditions are met, get out. You know what I mean? And that's all calculated by the ATR. So, and usually from what I've been told, it's no more than 12%, and it's usually under 9%. So maximum losses I'll take are 7%, and I'm hopefully, obviously, you're gonna want to have fewer of those and have more winning trades than the losers. I've got one guy who's actually following the same principle, and he's up at around a 70% win ratio, so he's doing pretty good. So
yeah, that sounds impressive.
Yeah, let's put it this way: if you got Goldman Sachs hearing they got a guy who's got the trading record to show that he's got a winning ratio of 70%, they'll hire him, and they'll throw a lot of money his way to keep him around. You know what I mean?
Wow. Yeah.
And they're usually happy with a guy who's got a 50% winning ratio, but like a 70%, he's doing well. I don't know if you've seen the video or the link I put up from the guy Ross Cameron, the day trader from Warrior Trading. He did a video about 2 weeks ago, and he put up his all his information on how he did as a trader. Now he's doing day trading, and he made $220,000 for the year, which is not bad. And he's only was doing it for 2 hours a day maximum. But the thing was, he was using this service called Trader Review, and he learned so much information from those stats. He knew exactly when to trade, and he had the exact numbers. He also had the exact price levels where he had made maximum trades on the price points of the stock, and it was usually $5 to $10 where he made his most money. He made his most money right early in the morning, the first 45 minutes, and he had the stats to prove it. And it was really fascinating to see how he learned from that. Now he's able to apply those stats and maximize his returns. And the funny thing is, because of that and the stats that he learned, he could put less effort in and know the right conditions on how to maximize return and keep his portfolio and keep the risk down, knowing these stats after a year of trading. So I guess another thing that'll be learned from the whole last couple of weeks is the site. It's called, I don't know if you know of it, called Trader Review. Have you ever heard of it?
No.
You know, let me pull. I'll give you the link in the chat box. I'll just put it in the chat box. But this site, it's a service. It's a service that you analyze your markets. So what you do is you let me see here. So you analyze your market, or it'll analyze your account, and it does give you a list of the available brokers. And I know Duca's Copy, Interactive Brokers are part of that. I can't. I don't know where to go to find the brokers. But yeah, because I'm with Duca's Copy, they have everybody literally except Oanda. But all the brokers, you have this service log into your account, and you just let it set. What do they call it? Set and forget. You pay your $49 a month. Let it run for a year. Let it watch your trading, and then after 3 months, 6 months, you can learn from those stats, and then optimize your trading and your whole strategies and set of strategies around that based upon the data that you'll see through this service. It's fantastic. Yeah, because here it says a risk analysis, does exit analysis, also analyze obviously your commission, your fees, and I'll do stock options, all the important ones, futures options, forex, all that. And yeah, you learn so much from this service, and I learned that through Ross Cameron. Watching that video, I'm like, holy moly, that's awesome. And then that's when I started looking for the brokers that work with this service, and that's when I saw Duca's copy, and I'm like, okay, let me look at Duca's copy. Started looking at the software last week, and I'm like, holy moly, liking the software, the JForex. I'm like, I'm ready to go. And the best part is, I'm able to have it all tracked through this service, all my trading, especially on the exit analysis. That's so important. You know what I mean?
Yeah, I wonder what somebody could do with all the data that this service pumps out.
Well,
even if it's anonymous, just put a number near every customer in the brokerage and analyze all their trades, and you can learn a lot.
Well, they could, but they're not going to understand the strategies that get you to this point. That's the key. You know what I mean?
Well, yeah, you don't have to understand them. You can reverse engineer a lot.
That's true. That's true. Yeah, that's true. But I mean,
so it'd be nice. I'll sleep on that as to what would happen if I knew if I was working at the brokerage and had a kickback of all these reports.
That's true.
Now I wouldn't even just put a number on them. I wouldn't need to know. I just rank them as to their time of day they trade and what kind of
you're right. You're right.
Trade with and reverse engineer, reverse all the normal. One of the techniques that I use, which is very common in Tradestation, although probably not as common as it should be, is the usual technical analysis. Uses indicators which normalize to some range like 0 to 100 or minus 1 to plus 1 or whatever, so they can be put into your
for statistical
software,
and then you analyze.
But I find that it works a lot better if I do it the opposite way, and I take for example. Like the RSI or any of those oscillator things, and plot them on the price. So if somebody says that MACD crosses of a certain set of parameters crosses 0, it indicates a change in the market. Well, then you should plot a line on against price. It says when MACD is of a certain type is 0.
Right.
And then you see, then immediately you see the correlation between what people are seeing in their oscillator with what happens to the price.
Right.
Like where does the price reverse, and when does it follow an indicate? React to a common signal on retail software, like stochastics or MACD or RSI or any of those things, and when does it not respond, or when does it respond in a opposite way? And one of the things I found is that just about everything that uses indicators responds according to indicators at sometimes, and then quite opposite at other times.
Mm-hmm.
And if you just look at the times that it's correlated to signals that people would trade with in their strategy because they were told that was a good strategy.
Mm-hmm.
And if you watched, if it was correlating and winning, you'd find that you'll find fairly large wins and then very large reversals
of
every strategy. And you look at that, it's just as if it was the equity of that kind of strategy. You look at that as if it was a security and trade that.
Right.
And that's becoming very popular nowadays.
Right. Interesting.
So something like what you're looking at here, choose your plan, that's a whole different dimension you could look into.
Yeah, well, the thing is, when is
trading in the morning good for you, and when is it not?
Yeah. Well,
that's apparently what you're telling me this guy was looking at.
Yeah. Well, the thing was, I'll try to dig up the post. But when you said that if they took all this data, this trader review, and maybe they do, maybe they don't, I don't know. But if they were to sell all the statistical data back to the broker, I mean, that would be very valuable to the broker for the market making. You know what I mean? That would be huge.
Yeah, there's an opportunity there. It's just awesome.
For them, yeah. For them,
So,
yeah.
Yeah, well, choose it. I'm a broker. Choose my plan. Gold, platinum.
Yeah, exactly. I'm just trying to think.
But anyway, this trader that I talked to, he used to be that I was working for a while before he decided to go and move and buy a farm somewhere because he was getting sick and tired of hedge funds.
Yeah.
He said that that this sort of business happens all the time.
Oh yeah.
Multiple customers where you work both sides of the fence.
Of course, we know that. But when you're the schmuck, like with a small guy, if you're the small guy, you got to protect wherever you can. And this area with Duca's copy with the strategies, right here, where you don't embed the actual strategy logic right into the strategy itself. I'm not sure if that's smart because then that may send the code back to this broker. It's better. I mean, you just give them the information on the orders that you're sending out and the data that you're watching. That's all they have when you offload the actual strategy logic into another process, like be it in my case, C++ or Python, because they'll never get access to that.
Yeah. But I mean, the thing that they have access to is the fact that they publish all these strategies and they have them all running at once.
That's
and
right.
They can look for correlations.
That's
or
right.
Non-correlations,
and if they're
anti-correlations, it's
right,
that simple.
Yeah, and if they were a not trustworthy broker, this would be a gold mine for them because they got all these people trading with their little modified Duca's copy stock strategies that they're being used, and like Duca's copy sitting there and going potential. I'm not saying they do or they don't. They got their market makers. That division's just it's just cash coming in and skimming off here and there where they can. It's
But all you need to do is say, well, did the price respond to a given strategy?
Right.
I mean, that's what I'm doing.
Yeah.
Look at the strategies reversed into price, so that they're transferred back into the price domain.
Right.
And see if there's a line there that represents a given strategy that's commonly touted, and if the price responds to it, then I see that people are using the strategy.
Right, and that's why we haven't even talked about it tonight. Dark pools are so huge for the institutions. That's why they do. That's why they exist, to hide their trades and anonymize their trading. Because if the regulators come back and say no, get rid of dark pools, and you the bank or the hedge fund that has access to the dark pool, you now have to publicize all your orders on the buy and ask, and you have the whole world watching what the institutions are doing. You know what I mean? Yep. I think
that might just happen quite soon. I mean, I've always thought it would happen sooner, but it didn't.
Well, the thing is like I was saying, if that was going to happen since 2008, it would have happened by now. And there's enough lobbyism going on at Wall Street from these HFT firms keeping those dark pools in place. But then yet again, we've got President Trump in power. We don't know what he'll do.
But he's got these guys from Goldman Sachs, and I'm sure that Goldman Sachs is a lot like the CIA. There's tribes within the organization.
Maybe that's
different opinions, and I don't know who's going to win.
Yeah, but that's probably why that's happening is to keep those dark pools in place, because you got to remember HFT drives 50% of the U.S. equity market. I've heard it's as high as 80%, and if it's
I heard that it was up in the 60s or 70s.
Yeah, even whatever.
It varies with time as well.
Sure, but that's a lot of capital flowing through those markets, And if it's rigged and people are obviously profiting off that in a rigged way, that's what they're protecting, for sure. For sure, for sure, for
And
sure.
it's probably rigged in so many different ways that it's, even if you knew half of them, it's still, you might be able to make money off knowing how it's rigged. But the fact is, I don't think it's rigged by just one person.
No, I think it's rigged, really,
rigged in
but
many ways.
it's rigged by an industry, that's for sure. And then
Yeah.
they got their little cartel going among all the big banks in New York, and
Yep.
and they're all putting all their pricing volume and trading volume through
And
the
of
dark
course,
rules.
Yeah, they've got the banks in Asia working against the banks in Europe and the banks in the USA.
Yeah, well, I think that was part of why they pushed TPP, because they wanted the banking industry out of the U.S. to control that trading volume coming out of Asia, and that would have enabled the Wall Street basically to have a heavy-handed influence on smaller players coming out of all these markets that were part of the TPP, for sure.
Yeah, well, I think most of the objection to the TPP could be summarized in that the TPP can be modified on demand, and the demand is made by unelected officials, unelected authorities.
I think they're mimicked to be elected, but it's that little.
No, they're unelected. That's what the complaint is.
Right.
That the people who make the decisions are unelected.
The way I look at it, I think.
You can also modify the terms of the agreement without telling other people.
Right. Well, this is the thing. I think the regular election that you guys have in the States is they'll bring in a president who's really a stooge for, let's say, an organization like the CIA, who's really driving what goes on in the U.S. government, and then the shadow government, and then there's a part of that that's being run and owned by Wall Street that is heavily tied back into the White House. And no matter whoever's going to be part, the quote unquote president of the White House, they'll always have their little henchmen from let's say Goldman Sachs as part of that administration. And then when they go back out and retire, they're now back running another association that will keep all the other banks in line. It's just the constant cycle.
I know that 5-year rule on lobbyists is really made an impact.
Yeah, it will. It will, but I think if let's just say the theory that I'm thinking, where Wall Street does have direct control when they can send in a Goldman Sachs executive to be part of the actual presidential administration, that is as best access as you can get in the U.S. without a doubt. They're running the show. They're running the regulators. They're running the narrative that comes out of Washington, comes out of New York, and comes out of the Fed. And then also that guy was mentioning about the U.S. Fed. And I was, you're not on my Facebook, but there was a very interesting story about how the Fed, like why the Fed was created, and who really owns the Fed. Who owns the Fed? It's the banking industry that owns the Fed. Who prints the money for the U.S. government and for the U.S. economy? It's the Fed. It's not the U.S. government that's printing money and cash for the U.S. economy. The Fed, which is owned again by the banking industry, they're the ones printing out the money, and then they send the IOU bill to the U.S. government saying, this is the debt that you have to us, the Fed, as we print out money to keep your economy sustainable. And that was what I learned from that whole thing. It's like the U.S. government has the debt, but it's the Fed that controls the influence of that debt. And at the same time, they're the ones that also control the cash flow and the printing of physical cash for the U.S. economy to stay afloat. So that is indirectly owned by the banking industry. So now if it's true, what they've done is that they've gone in and sent in their Goldman Sachs henchmen to also keep the the presidential U.S. administration in line to their benefit. That's what I'm starting to see, and especially watching that video of that Chip Tatum guy, I was like, now it comes together. You know what I mean?
Yeah, and then people like Goldman Sachs, they're internationally
Right.
oriented, and they're oriented not just to the Federal Reserve, so-called Federal Reserve,
Right.
but they're oriented to the International Monetary Fund.
That's right. That's right.
The International Monetary Fund has just accepted China and their yuan
Right.
into reserve currency pool, where they can use that to apply its currency along with the dollar and the pound and the yen and whatnot to the special drawing rights that are issued by the
That's
IMF.
right. That's right. And that's what they're forecasting is that.
So that's going to supersede the Federal Reserve eventually.
Well, I don't know if you watch James Rickard on that. That's what exactly.
Yeah, he's the one that wrote a book about it.
That's right.
And I read him almost every day.
That's right. And he's the guy, and he was the guy who negotiated. Was it Greece? So he's got some legitimacy. But what he's saying is exactly that, where he's saying that the U.S. government, one of two situations will happen. As the U.S. government racks up its debt, there'll either be a loss of confidence in the U.S. economy, loss of confidence in the U.S. government, and or the loss of confidence in the Fed. And once that happens, that's when the government will eventually default. And then that's when the IMF will step in with their SDRs and issue the SDRs for all the major economies to stay afloat.
Yeah, that'll be the bailout of last resort.
That's right. But the funny thing is if you looked at the conspiracy theory, it in the Bilderberg and all that, it sort of kind of in a weird way makes sense.
Yeah, well, I think most of them are. I think things like Bilderberg are just to put people face to face so that they have more confidence.
Yeah.
Body language means a lot to humans.
Yeah, especially.
Like just go say if you're a little bit paranoid about something, go ask your buddy that you believe will tell you the truth.
Yeah, and when you look at the who's who list of going to Bilderberg, they're all coming out of North America, Asia, and Europe.
Yeah, and a lot of them, I've seen a couple times. I've looked at the list. It's usually the people that are involved in running the economy on one hand, and running the largest high liquidity, large people. Businesses that are being followed by people that study the markets.
Right.
They'll pick guys like Zuckerberg or Gates or somebody that's a rising star that people follow. They're what they say.
Or not only that, but they also
that's where confidence comes from.
Right, but they'll also bring in a guy like maybe. Last year, they'll think that Jeb Bush is going to be the next president, so they'll invite him, or Hillary Clinton.
Yeah, right.
And then they never foresaw Donald Trump coming to this thing. So,
well, Ricard foresaw it, but in fact, there's quite a few people that did.
Well, I saw it myself.
But still, I mean, I certainly had no idea what was going to happen until after it happened.
No, I saw it happening. I've been watching it. I didn't think he would really win, but I
thought he might because he was obviously aware that they were trying to rig it against him.
Yeah.
And that's an opportunity to make a surprise.
Well, that's
if
the thing.
If you see somebody being believing in something that you could thwart, let them believe in it and thwart it.
Yeah. Yeah.
and that happened.
Well, I think moving forward with Trump as president, there's going to be so much volatility in the markets that any smart person would want to get into trading now. And the two areas to play in are definitely forex, even as a retail forex trader. And I think the options market will just go crazy, will just go bonkers in all kinds of different areas, and it's going to be so volatile. If you know how to properly play it, know how to properly forecast it, you could do very, very well.
Yeah,
As
I
a
know. I've looked at options and futures, and it's really hard to find information on trading those.
well, let me get
Really,
well. No. If you got the time and you're willing to put the effort in, there's a course from UC Davis on there, on you that I use, and I've had a lot of people look at this course and say, you know what, this is how, yeah, this is how the futures and options market works, and these are from um, the big boy players. So this course here is the one I'm using for my options. Here, I'll put it in the chat box.
okay. You at UC Davis future options.
Yeah,
Okay.
this course is so good. It's old school, but it's all the fundamentals of all the things you can watch and analyze in the options and futures market and understand the price movement and understand that with the FX side, you got a very good combination of really understanding what drives price. Because it really comes down to supply and demand. This was really eye opening. If anything I've learned in trading, Bloomberg News and this one right here is really powerful. There's 25 lessons. It's 45 minutes. It's a real university course. And you got hedging in there. You've got all the different put call. People don't know this. Put call parity was the number one strategy to play last year when the markets flatlined. So if you have that as part of your arsenal, as part of your trading strategies, uh, that will half the market through the year will enable these kind of strategies to be very profitable for you. And if you have your indicators telling you that it's moving into that type of regime, then you can have these kind of strategies kick in and trade for you, not just the traditional way. Because the hardest way to trade, as you know, is through flat markets. It's these kind of strategies will do very well for you in those kind of markets. Because last year, what half the market was about was in range, was range trading like through the summer, if I remember.
Yeah. Well, this just recently the S&P 500 has been in a very very flat range.
Right. And the thing is here on the downside with the hedging, very powerful to know. I've got a guy local to me. He's an options trader. Let's put it this way: he travels 4 times a year to very very exotic places with his entire family, and he's an options trader. And I asked him about this stuff, and he looked at it, and he goes, "Yeah, this is pretty well how I trade, fundamental, and very knowledgeable." So he's doing well. So when I get a guy like that telling me that this course has a lot of legitimacy for what he does, uh, he's doing very well. As an individual trader and an independent trader, he's probably my best guy that I know that's really opened up to me. The thing is that there's two sides when it comes to options or at futures trading, being the speculator or the hedger. 80% of the market will be the hedger, but he's the guy. Oh, sorry, 80% is a speculator, 20% is a hedger. He's on the hedging side, and about 70 to 80% of the time on a future trade, 70 to 80% of the profit is on the hedging side. So he's the guy who's writing the options, and he's just basically churning profit all the time. And I got another guy out of Chicago doing the same thing, and he's a big wig too. He looked at it and he goes, "Yeah, that's how I trade." So, not a lot of people trade like this, but this course really opened my eyes on how the big wigs do it versus the the retail guys. I got a guy who always argued with me as a retail trader, and as I went through this, I kind of guess you could say argue with him. He's no longer trading now. You know what I mean? Because he's trading like he's trading like a retail trader, and that's usually what ends up happening. Is they're not career retail traders because they're always losing money. But the guys that are career traders, they always end up trading like this on the professional side, on how the pros trade, and you won't find this kind of information out there a whole lot, and a lot of it is basically ignored because it's using fundamental, and nobody wants to trade fundamental because they want to do the sexy machine learning and the sexy quant stuff. And then you got the retail guys that want to do the technical analysis. But from what I'm seeing all the time, a common thread is always the fundamental stuff that works. And this coming out of this course is the true fundamental, not analyzing, like an annual report and whatever fundamental analysis comes out of that. We're not talking about that kind of fundamental analysis. We're talking about what's coming out of this course.
Yeah, that looks really good.
This is watching the Treasury bond, and that obviously has a huge impact on the markets. This one, the intertemporal pricing theory, on how the pricing changes all the time and how it's so random. I mean, this really opened my eyes. He's got a little section here on foreign currency trading as well, which focuses on euro, dollar, and yen, and how to properly convert the conversion when you do the switch over between the U.S. and the Japanese yen. And it has some really good stuff. And then he does a section on technical analysis, and he goes, technical analysis he laughs at. It's still useful in certain ways. And all the other courses and all the other pros that show me stuff, it's the same friggin' thing where they go, technical analysis mostly laughed at, but there's still elements that's widely used by the pros. And this one, the exit and the entry that I talked about with the ATR beta on the exit side, and then the entry with the trend line and the moving average. That's the only technicals they use, and they just use that to time their trades. But I'm going to actually add more to it with the logic of, as I was saying, about the inflow and outflow of certain assets that I watch, and trader commitment reports you can also use as well. Commitment trader reports you can also use as an exit indicator. There's a lot of cool things. You can obviously use statistics as another one, where here I'm using statistics. I don't know if you've seen the video, but what I use, actually on both sides, you could use basic statistics. You do your typical normalize, you do your typical distribution, but all you're really looking for are just the number of negatives versus positives, which you can use as a measurement of momentum. And then the same data, as you're using those statistics in the distribution, you can kind of, not get 100%, but you can kind of calculate your turning point by using the number of negatives versus positives as well. And then have another couple of confirmations, like the trader reports, commitment trader reports, as a confirmation on those market reversals. But you got to remember, using the commitment trader reports, they're really used for when you're only taking on positions for very long term, like a month or so. So you're only doing this type of analysis weekly. But if you're going to do it on a high frequency level, you got to use other indicators as well. You could still use definitely ATR. You could definitely still use statistics, but the one that I'm still looking for is what are the pros using, and I'm starting to feel you could use, as I said, the open interest. You can also use the shorting versus the longing on the options calls, and you can also look at the ETF flow as well, the ETF inflow outflow as another measurement as well.
That makes a lot of sense.
As confirmation.
That's what I would call context, and that's what makes things that's what makes so-called regimes change.
Right, but you're also watching what the hot money, what the institutional money is doing. When you're watching the ETF flow, you're watching the open interest, and you're also watching the shorts versus the longs. And I all picked all that up through the Bloomberg News because that's what they're reporting, and so many people ignore that. It just boggles my mind, and that's telling you, that's literally screaming at you what the professionals are doing. That's what the institutions are doing, and you can watch that on tick level.
Yeah,
You know what I
I do
mean?
know one thing that the professionals really look at, and it's pretty blatant, and that's professionals do big deals, and
Yeah.
a deal is big enough it has an impact, and so people are watching. Where are the bigger players playing?
Right.
You know, are they active or are they standing by?
That's
Is there
true.
something? What do they know that we haven't heard yet?
Well, that's still one. I think a lot of that news still they still want that news to get out because they do that for competitive reasons. So if Goldman Sachs says we're doing a deal on the Snapchat, whatever, next month, they want it to be known to Morgan Stanley and all the other players that we are working on this deal. So that that data, that news is always going to be out there for sure. But
Oh yeah.
but
And
the
if the deal isn't going to happen all at once, you know, in other words, they're not going to, buy, well, sometimes they'll have a sudden announcement that so and so is going to buy somebody else.
Yeah, but the problem is right now that the activity in the merger and acquisition is so low that that to me what it tells me there's not a lot of confidence in the economy, not a lot of confidence for M&A to happen.
Yeah, there's no slam dunk opportunities.
Right, but
People are in a state of uncertainty.
right, but the hard part is no different than trying to trade in a range bound environment. It's a very difficult environment to trade in. But if you're using
It's a
that kind of
different
data,
context.
what's that?
It's a different context.
Yeah, but what I noticed is that they just started doing the ETF flow and the open interest flow and watching that on a tick level, and you could definitely do that, and that tells you a lot of information that this is what the institutions are doing, and usually they're also doing that as part of lining up their own trades for the next day. That's what I think.
Uh-huh.
So I still got to look at that and analyze it. But those are the three.
I do know that the hedge funds and all that, they'll have meetings before the market opens and decide what the strategy they'll basically hand out some kind of a plan. This is how you guys are going to trade
That's
today
right.
because this is the context of the market.
That's right. Yeah, they do that every day. Either they'll come in at 7 o'clock and set up their trades before 9, or they'll do the same thing with the evening reports to set up their Asian trading desks. For sure, that's what they do.
So there is a daily factor. If you don't take into account what happens from day to day, it doesn't make a whole lot of sense because you don't know the context of what's happening in the intraday.
Right, exactly.
And then also the quarterly and the yearly and all the other time frames as well.
Yeah.
The calendar, that's one thing that's predictable, is when the month is going to change, and it's predictable when the quarter is going to change, and it's predictable when it's midnight.
Well, that's why I like this live economic calendar, because this is telling you basically how your plan should be, and all you're doing is you can set up strategies and automate them to look at the data, look for the patterns that you know of, and build a trading plan around this data, these events for the next day, and then base it around your risk and your tolerance, and you can set up how much capital you're willing to allocate based upon two things: the outcome of that decision, the risk reward of it, and your trading performance as well, and do it in an automated way. And then at the same time, you can use your historical data patterns on this particular data to see how it correlates for that news event. That's the way I look at it. And if these
one thing you can predict is that if there's going to be an event about something that's going to happen because it's been announced that it's going to happen at that point in time. It usually happens pretty close to that point.
Well, yeah. Look here. You
anything that's calendar driven is predictable in a sense.
It is, yeah. I mean, look, you've got things like Bank of England, money credit lending. Like that's an indicator right there to tell you the confidence level of what the banks feel on setting up accounts for new businesses. And if it's low, then you know the environment, the economy's in a funk. That could have a negative impact on the British pound.
Yeah. It'll definitely usually have a larger impact if it's very wrong. And in other words, it's a surprise. If they, had predicted one, estimated it would be one thing, and it's radically different, then Billy goes, "What?"
But
adjust accordingly.
No doubt on that. But that's where you're using the risk reward and the risk, what I call risk reconnaissance, or the analysis on the economy, the trading activity. There's a lot of things you can look at the economic level leading into this call, because that's what let's say the Bank of England, Mark Carney is going to use that data to make that call if we're going to raise interest or not. Let's say they use the same exact data, but all you're going to do is you're going to automate that and figure out what would Carney do. And there's many ways to look at that. And not only that, but the same data could tell you where the hot spots in the economy are if you're going to trade equity around it. That's what I'm saying. There's so much data here that people just ignore it. It just boggles my mind.
Yeah.
And that's okay. They can ignore it. That means because it's more opportunity for me. The less people that are doing this, the better.
Well, I think a lot of the people that move a lot of money, they study this stuff.
Well, that's all they do. As far as I was told, if you're a graduate coming out of school, the first thing that they expect you to learn is the global macro event strategy. If you're going to a hedge fund, they expect you to know what it is, know how to do a trading plan around it, and then demonstrate to them what you would do. And they are analyzing your trading analysis using this exact same concept of data, economic events. The previous guy I was talking to, what they do, from what I gather, they're probably running. They have access to market data at a very, like, let's say level 9, let's say. So they get to see the trading activity in real time, and what the institutions are doing in real time, and they're probably looking for discrepancies in the market that open up a market opportunity that they could put some trades on, and that's how they do it. And it sounds like they're I don't know if they're a high frequency shop, but it sounds like that's possible, one way of how they could go about doing that. So there's different ways to look at the market, but in the first hour of this thing that we're doing now, I asked them that what are banks doing? How are banks doing their analysis, and how are they trading? And from what I'm seeing, they're doing the stochastics, and they're doing basically correlation in real time, and that's how they make their money. No, nothing else, from what I'm gathering and speaking to other people.
That makes sense.
Yeah,
there's a lot of stuff to look at there.
Well, it's not just that, but you got to know what to look for, and everything after that is all about timing. So for me, let's say if I follow this methodology of watching these macro events, these economic events, and trying to understand the economic trading behavior between two currencies and how these events will impact those currencies. Not just that, but as you said, how do you know what the outcome will be of that event? Well, you'd look at the economic data of those particular countries, and that will tell you what those central bank heads will be deciding, right? So they're going to use the same data, I would think, or similar data. So it's sort of, as I said, this data is screaming opportunity every which way, and it's screaming so many times, like Eurostat unemployment. Yeah, of course it's going to impact the euro. You know what I mean? And that's just what I'm looking at right now. You know what I mean?
Yeah.
And that's what you look for. And this could be a big market moving opportunity. Like if the euro moves whatever currency I have as part of the pair, and that trade moves more than 1%, but let's say I have 5 currency pairs lined up against the euro. So let's say, let me just see what's with the euro. So if I have any of these euro pairs, try to calculate the impact of the unemployment that could have on these economies, specifically like Norway for sure, because that's part of Europe, and Russia and Poland. I bet you'd get some kind of movement. You could probably do some kind of analysis, and if you're right, you've now gotten. Let's say there's a move of 1% for that call. You have a 1% move, but you've put on 3 separate positions. You've now have not just 1% move, but you have 3 times the position differential of 3%. And if you can do that every day and all day on those kind of moves, you could easily scale up your account very quickly.
Yeah.
Yeah, and that's how I'm looking at it, because these kind of stats will have that kind of impact on the euro. And there's a bunch of them here. Labor, U.S. Labor Department Bureau Statistics. I don't know what this call is, but that will definitely impact the U.S. dollar. And then there could be one on Japan, and that's just today. You know what I mean? ISM for Chicago. That may have a little bit of, but here's one on U.S. Treasury selling 45 billion. That could impact the U.S. dollar. So there's these probabilities of, yeah, there will be moves on the U.S. dollar if you pick the right one, and you look at that data that will impact that event and forecast it. You could probably, I mean, I'm just looking at the euro and U.S. dollar, and just the 1% moves, and there's tons of these, and this is just over the next 24 hours.
Yeah.
I mean, you got India, you've got Europe, Australia may have a big impact. Japan definitely, especially the automobile. You've got South African rand. That one right there. Look at that money supply. That's definitely going to have an impact on the rand.
Oh yeah.
The Norwegian credit indicator, that may have an impact. Malaysia, like the current, these stochastic don't have access to these currencies, but you can see what I'm saying. Turkish Statistical Institute, foreign trade, that will have a huge impact. The Turkish lira is the most volatile, and that will drive that currency pair of, let's say, on the Turkish lira. I mean, there's going to be tons of Turkish lira. I know there's one for Europe, the Turkish lira. Yeah, right here. So if you could set up that trade, or U.S. dollar and Turkish lira, but you won't get that kind of opportunity with the Turkish lira, because the Turkish lira is not supported in a lot of the North American brokers. But if you use LMAX or Dukascopy, you have access to these kind of currencies. You see what I'm saying, though, right?
Yeah.
But there's so much opportunity here, dude. It's just crazy. Look at it. You probably got probably 20 different ones you could do analysis on, and that's just for today. You know what I mean? And these are the reasons why these currencies will move. And as I said, if you get a 1% move on those currencies against other ones, and then you have other positions put against those currencies, you're now multiplying those moves. If, as I said, with the euro and those 3 other currencies, you know what I'm saying?
Yeah.
And then just do all you do is just an analysis. You don't need to do any heavy mathematical or any type of quantitative machine learning stuff. This is just basic economic trading data. You know what I mean? And this is just FX. Then you move into the world of futures and options, and you're going to get the exact same type of calendar. But obviously, you're more probably going to be focused on the U.S. But look, you got one for Hong Kong. I don't know. There's just a lot here. And then I can load up here. I could look at tomorrow, a week ahead. And then we have economic, corporate. Yeah, look at this. This is crazy. I don't know how to use the software yet to move it ahead. But let's say if I go to the 1st of February. Hang on here. Okay, February 1st. How do I update it? Oh, here we go. So there you go. There's February 1st. Look at them all. That's for tomorrow. Wow, look at it all. That's a lot. That's crazy, eh?
Yeah.
There's so much sitting there. These are this. I think this is really. The more I look at it, this is what's really driving the currencies. Nothing else. And if you know how to trade these for the next day, you could do. And if you get a lot of these correctly, and then you understand the trading relationship between the pairs, you could do extremely well and know how to play the risk reward game really well, and also use the Kelly criterion to throttle your trading performance as well to protect your account. And even let's say if you're wrong using these ATRs that I said, the maximum drawdown on that particular position would no more than be probably 10%. And if you get, let's say you put on just statistically, let's say you put on 10 to 20 a day of these, and out of that, just statistically, randomly, you could probably get maybe a 50% win ratio. What do you think? I don't know. I don't know. I don't know. I'd have to look at this and analyze it. But look at that. That's just one day. That's incredible.
Yeah, that's a lot of reports.
Sure, but that right there in front of you is opportunity. Every single one of these is a market opportunity. And if you set up a trading strategy around that, that will be able to calculate which ones are worthy of trading, and then at the same time using historical data and economic data to forecast these calls, and then be able to set up trading positions around these, again using trading patterns. I should say, I'm referring to countries trading between each other and understand those patterns. You could do really well. And you know how you find this out? You just go to it's called economics. Trading economics. You subscribe to these guys, and you can get all their historical data right here. Like you could get their latest GDP, year to year, quarter to quarter, interest rate, inflation rate, jobless rate, budget, that the GDP, blah blah blah, and then be able to determine using that data to figure out what those calls will be on the outcome of what. So basically, what I'm saying is that let's say, let me see here a good one. Let's say the Russian PMI, right? So if you want to trade with the ruble, right? You take a look at what Russia's going on right here. You could use all this data to figure out what's happening currently in the last quarter. Let's say what's been happening with the Russian economy, and you use the PMI to forecast that, and you make a call and set up trades around that. And this announcement will definitely have some kind of impact. If it's positive, let's say, then the ruble will go up. And then you have pairs trading around the ruble that you could have access to and set up positions around that. Pretty straightforward stuff, I would think. Let me see here. What we got? We got the ruble. Yeah, you got the U.S. ruble. I think there obviously there'll be the. See right here would be a really nice pair: the Turkish lira and the Japanese yen, because they're heavy trading partners. That's why I think they have that currency pair. I think there's only two. Yeah, so you only have two pairs with the euro and the ruble and the U.S. dollar and the ruble. So, but you see where I'm going with this, right?
Yeah.
Because this right here, these calendar events are screaming at you market opportunity, without a doubt. And you just do your analysis to analyze the economies, make a call which will impact the dollar or the currency and the pair. And if you get minimum 1% move, you've met your goal. And if you could do that each and every potential call here and try to hope to get a 1% or 0.5% move, and then you have different currency pairs that you could use to scale up that percent from, let's say, as I said earlier, 1% to 3%. You could do pretty good, and you could automate this in so many ways, and you could do this each and every day on each trading opportunity, looking for things that will impact those currencies. That's how I see it. Because you have here tradingeconomics.com, you subscribe to them, and they will give you deep analysis on trading data, and see how the economies are doing. You get all the different data here for each country, for each region, and try to make a call on these events. Interesting. That to me would be an interesting strategy to develop. And I don't think it'd take too much. The only difficult part is just the patterns and the historical data. But I don't think it'd be too bad to do. You know what I mean? So I don't know. I'm looking at the time. I've run another long session tonight, almost a 4-hour session.
Yeah.
Dude, I love doing this. I love doing this, talking to people. It's amazing. This just gave me an interesting idea, talking to you. I thank you for that. Um, but you see where I'm going, where I'm coming from, eh? The potential of it.
Yeah.
It's not very complicated to do, and I'm sure some brokers have this kind of data for a U.S. broker. I know Oanda has it, and FXCM has it. The problem is that you're not able to trade the more volatile ones. Like the lira right now is super volatile because of the political upheaval that country is going through. That's why I'm really attracted to it. And South African rand is another good one too, because where there's volatility is market opportunity, which equals potential profit if you get it right. That's the hard part. But again, you can use the data, as I showed, the economic and trading data, and look at the potential historical, and make a call from that. You know, I could see somebody building a machine learning algorithm around this, which would make sense. And it wouldn't be actually, you don't even machine learning, but some kind of um, statistical probability based upon the data that you feed into it. Look at this. You got all this PMI stuff. You got all the market economic. These guys are big market. All the PMI coming out of them. That like this is just tomorrow. And this is, you'll never hear about this news on Bloomberg or any of the news. You may hear about from market on, let's say, Bank of England or Germany. You may get on the news feed, but the other ones you'll never hear about them. Like Poland here, like you would never hear that. But because I'm with Duca's copy, I have the potential to trade the Polish, the zloty. I can never say that right, but I can definitely trade it. Wow, interesting, eh?
Yeah.
Yeah. So if you got any questions or anything,
No, I don't have any questions today. I was just wondering if I could drop in on your seminar here.
yeah. Well, not much.
Session, and I succeeded in getting on.
Yeah. Well,
which is great.
the other guy had the second thing as well, and the results were really good that came out of it, which is really I learned a lot about what's happening in New York with the employment market and what they're doing down there. And on top of this is even more value because this is going to directly impact me. This may be this here may be a loss or a big time waster, but just going through the exercise of it, I think will greatly enhance my analytical skills. But I'm going to be honest with you, I'm biting at the chomp to put some money on this. I mean, it wouldn't be big money, but like literally, it would be like literally dollars, like little small, like $1 here, $1 here, or $1 there kind of thing.
Well, that's the thing that it has more significance to your unconscious mind if you actually have skin in the game.
Yeah, that's right.
I think your brain takes it in better.
Well, yeah, you're more cognizant of it. I guess is the right word.
Yeah. More unconsciously cognizant of it. In other words,
yeah.
When you'll sleep on it, it'll actually go into your computer and be in there.
Yeah.
One in your brain, that is.
Right. Yeah. Well, I mean, I'm willing to put some risk on it. I'm not going to put like a 10K account bet on it. But for $100, I definitely see what happens. And if it works out, hey, I got to work in strategy. Yay. You know what I mean? I'm not going to make millions of dollars from it, I don't think. But the key behind it is understanding, for me right now, at least from what I'm learning on the Bloomberg side, is really understanding the money flow and what the professionals are using as an indicator. And as I said, with the open interest and the short versus the long and the ETF flow, those are recent indicators that I thought the professionals would never use, or they use, but they just don't let it be known publicly that that's what they're using. And when you go onto the forums, are you on a lot of the Forex forums at all?
No, well, I've been on some off and on, but I've been following futures more than Forex.
Okay, even with the futures, do they talk about this sort of stuff?
Oh, yeah.
Oh, they do. Okay.
But I mean, every futures market's got its own personality because, like with oil, for example, you've got geopolitical events with Saudi Arabia changed the price by a factor of 5 or more in the past couple of years.
Yeah.
And a lot of it involves people that own tanker ships that could store the oil floating around and traveling around the world.
Yeah.
And what happens to our economy and our industry here with the different explorations going on.
Mm-hmm.
It's totally different from, say, the financial markets with stocks.
Yeah. Entirely different.
And then you have precious metals, entirely different again.
Yeah, exactly. Well,
what makes an indicator of a likely trend change is entirely different.
Yeah, exactly. Well, between the gold and silver here, that's just, not just that, but it's a safe haven as well.
Well, the dynamics driving it are quite different.
Absolutely. Like when the economy was tanking, when China, gold this time last year was it February, had a 20% run.
Yeah.
That's where people scramble. And the funny thing is when I listen to these gold and silver storage shows, they say that silver, because it's more widely used in industry now, is more valuable now, will actually appreciate faster than gold, which is I found kind of odd because they're using more silver in industry now than gold, and that's still used as the poor man's gold. So silver may be a good commodity to have in your portfolio.
Yeah.
Moving into a lot of the uncertainty and how everything could possibly, I don't know if the markets will tank, but anything's possible. But the other thing is you don't need to trade the markets. You could just trade the indices, right? Like I got the 500 here.
You can't in here. You can't. Those are contracts are different.
Oh, I know, I know, but I think that these will trade off of trends, right?
Yeah,
So
but I know that I can't trade with Dukas copy.
no, I know,
I'd
I know.
have to have a buddy up in Canada.
Yeah. What
And
you?
I'd run the computer with TeamViewer.
Yeah. Well, that's what I might do. Or if you're one.
You could have a trade by proxy system. That'd be really
Well,
bizarre.
you know what? That my analytics service will be kind of like that because the scripts that I have here, they're going to be a mirror script that will actually post what these generate. We'll post it into the analytics service. So these charts that I'm showing here um, are going to be posted in the service. So people have access to what my system does. You know. So this will have the exact same data on the candle side, as well as the technical, the RSI, the technical with the volume or the MACD. So all that will get posted. So the problem I'm going to have is people sign up and hopefully use it if they'll really make use of the data. And the other thing is I'll be posting my system stop loss will get posted in there as well, and I'll post the actual percentage that the system generates. So in my case, in the Python, when I look at where's my exit? So when I do a calculation on the ATR here, this ATR gets reported back into the system, so everyone will have access to that information. So there'll be it is essentially a mirror of what the system's going to do. And then as I scale up the system, then I'll start reporting on the portfolio as well as it's trading. So what the system will do is there will be a position log as well. I mean, it's not going to be the exact same what you'll see in here. Let me just see the log. But it's just basically the targets and the stop loss will be part of that position. But it'll also report the time of entry, the time of exit, and the quantity of the units and the price at that time as well. So that'll all get reported in my analytics service. And then I'm going to have on top of that, I'll hopefully have a chat room like this, what we're doing now, and just talk about what the system's doing and what it's seeing. So there'll be a whole community around that. Hopefully, you know what I mean?
Yeah,
that's the goal, and that's going to be using Dukas copy as well. So that will get shared, and if the stats are good, that's where the trader review will come in as that verified performance. And the other big one is obviously for my own learning on, at what point did I make most money, at what time of the day, let's say, so on and so forth. There's a lot to learn from those stats in itself on how it trades, and this trader review I think will definitely help there, because you're no longer trading and throwing darts in the dark or money in the dark. You're actually got real data to work off of to be able to use this data to tweak it based on the performance, as well as you have the real data coming in from Dukas copy, and then of course you have the system's performance as well being logged as well, and I'll be able to use all that data combined and be able to tweak the strategies on how they perform. And what I'm really looking for is maximum opportunity. I'm not interested in, like, if I'm going to put $100 on today, I want to look for trade positions that are going to give me, let's say, a 25% return, or the probability of a 25% position versus a 5% position. Things like that. And then using obviously risk and reward on that as well to gauge if it's worthy. It's too much risk, so don't take on that position. So I'm gonna have a whole system built around that. So, and then there's a forex one. I'm gonna do the same one, same kind of principles, for the forex, sorry, for the options and futures one as well. So there'll be two systems. And I may have a third system just for signal generation on ETFs, on just what to put, where to put money on an ETF front as well. So that's pretty well how I'm going to move forward over the next couple of months, hopefully. But actually put money into it. But I'm going to start the focus on the forex side because it's very not low risk, but I can lump the drawdowns if they don't work out, and just keep feeding it as I tweak it, and putting money into the account. And it's like I said, it's like walking into a casino and just betting, but I'm betting with data and being able to analyze the data, and then tweak it based off of that data. So that's pretty well it. So anything else you want to add or anything?
No, that's plenty for me. I mean,
Yeah.
It's time to go to bed.
Yeah, I hear you, dude. Like you came on at 9 o'clock. We've been at it for 3 hours and 1 hour with the previous guy. I mean, for me, this is really important because I'm learning as I go, and getting contribution from yourself, from another guy who's a real world in an institutional and in a firm, and I'm learning from it. And it's
Well, it's good that you're sharing it around because
yeah,
I think we're all interested in hearing what's going on.
Yeah.
You've got a good clearinghouse there.
Well, yeah, thanks. But I don't know if you're on the Facebook, but if you're on the Facebook group, there's a lot of.
Well, I don't usually use Facebook. I go on my computer and it comes up. My daughter comes up.
Oh, well, I'm just saying.
She uses it more than I do, so it thinks that I'm her.
No, I'm just saying though, like where the real learning is in the Facebook group. This group I'm loading up. This one right here. I've got 9,100 people here. So that's where the audience is. So I'll post something and somebody will post something. There can be some good dialogue that comes out of it. And I've got now people posting their thoughts on the economy. And these some of these are real world traders. So there's this guy, he's posting his systems reports, what it's seeing, and it's like this whole combined effort of a bunch of people. Yeah, this group is getting really good. So my system will start putting some reports in there. There's this one. There's another guy who's doing his stuff, and he's gonna start feeding some data in here. And we got like this amount of people watching it, and there's some dialogue that comes out of it. So this is where the growth is, I think, for me as a group. Yeah, this is grown into something really valuable. I'm finding that people are actually taking away, and there's some really high power traders in there. So even if you don't like Facebook and you don't trust your name, create a fake Facebook group or Facebook account just to join this group and learn from it, because
I'm sure I have one somewhere. I just don't remember where it is.
Yeah. Yeah.
I'm in the process of moving, and so everything that I had is in boxes in a different city.
Oh, I see.
I mean, I have a hard time with passwords because I have a book with all my passwords in it. It isn't here.
Yeah.
It's funny.
No, I hear you.
Yeah, I was supposed to have been moved last summer, but it didn't happen. So
I'm
here in an empty house and having lots of fun.
Oh, okay. Are you still going to
go on the computer?
Yeah. Well, are you still going to stay in Michigan, or are you going to?
Oh yeah, I'll be in Michigan. My brother-in-law lives up in Midland. I'm in Ann Arbor. It's just a 2-hour drive.
Oh, okay.
And my brother is up in Bay City, which is like a 20-minute drive from Midland, but an hour and a half drive from here. So,
yeah.
In this house, 6 of us were living here. Now there's just 2 of us.
Right.
We're empty nested.
Right. But
So
how's the economy in Michigan overall? I mean, is it getting any better at all, or?
Well, it varies with area. Grand Rapids, for example, on the west coast of Michigan, is one of the fastest growing cities in the country.
Really?
For small business startups. And, of course, Flint, Michigan is in the toilet.
Yeah.
Midland is losing a lot of really good employees because they merged with DuPont.
Yeah.
And so, what happens? There's always a sucking sound out of executive suites, and engineers and scientists get sucked out when redundant jobs are filled by one side or the other.
Right.
So some people's workload goes up on one, in one of the companies, and then somebody else's workload is eliminated in one of the companies.
Yeah.
In the other of the companies, and one guy's in charge of it instead of two people doing, duplicate jobs.
Right. Well, I don't know where it'll go under Trump. That's the thing.
So I can get a house just as good as mine for a third the price if I move.
Right. Well,
that's where my money is at mostly. Retired. I had money in the oil business, but that died.
Yeah.
There's no money in it now.
Yeah.
Even though I have partnerships that were what I called a pension after I retired.
Yeah.
They're not paying anything anymore until the price of oil goes back up.
Right. Well, I don't know what will happen with that, but I mean, did you foresee fracking coming in that would greatly impact? I mean, it's really driven by Saudi Arabia that really.
Well, Saudi Arabia is paid I don't know 20+% of Hillary Clinton's campaign.
Yeah.
As they've gotten have some kind of a relationship going and communication going that dies if Trump gets elected. So there was, they spent more money helping Hillary, just the Saudis and the Saudis' partners over there, like Qatar, maybe one of those other countries, and spend more money on Hillary's campaign than Trump spent on his whole campaign.
Yeah. Well,
talk about influence, and foreigners aren't even supposed to be influencing the election here.
But I found that the
CIA comes out and says, "Oh, foreigners were influencing the election. That's bad."
Yeah.
But who's contributing money to campaigns?
Yeah, and
is that hacking the election? Well, it depends on who you are, how you define hacking.
Not just that, but the way the media sends out like only half truths. They don't really report on how Hillary Clinton's been her campaign has been all that money came in from Saudi, and at the same time I found it really funny that nobody knew that they actually closed down the Clinton Foundation in the last few weeks.
Well, yeah, that's been a thorn in their side because of alternative reporters. What do they call it?
Alt news.
Independent reporters or fake news. Well, fake news. I'd say that what it used to be called the mainstream media, and is now called by some the lamestream media because their readership is decreasing.
Mm-hmm.
And alternative media, the small independent news media, which are like blogs on the internet or even websites that consolidate biased news.
That's right.
But they vet it better than even the biased news people are very diligent at making sure they use really material published by other people.
Yeah.
Or actual reports gathered by their own people they put in the field.
Right.
It's still small potatoes in terms of budget, but bigger potatoes because people are interested. Like we learned in civics class, and when I was in the 9th grade, that's more than 50 years ago.
Yeah.
That you should be reading biased news media from both sides and then comparing what they're saying. And the arguments that they use will tell you more about it than when somebody's middle of the road.
Well, not just, but I remember back in the day, 20, 30 years ago, it was always part of the journalistic code of ethics to always be unbiased and neutral in your reporting. That was a standard in all media outlets. And then
but what is unbiased? Really, you want the extreme opinions on both sides and put them side by side to see what What are they disagreeing about?
Well, I'll tell you this because I consume a lot of Bloomberg, and they do some mainstream media like traditional news. They seem to be fairly neutral. Like they just report the news, and they don't put any spin on either for Clinton or Trump. They just reported it raw, and they left it at that, and let people decide for themselves. And then when you watch Bloomberg TV, they don't get too much into either one side. And if there is that, it's nothing to do with the journalists or the anchors. It's the analysts. The analysts they bring in, and they'll start insulting and bashing Trump or something, and that's when Bloomberg loses its quality. But the journalists themselves don't appear to do that.
Yeah, well, that's what I think. That's one of the things that journalists should be aware of is like decorum of the business.
Yeah.
You know, legitimacy of the business. You have to be, on the one hand, unbiased, and on the other hand, explain what the biases are.
Mm-hmm.
Like, what is the controversy about?
Right.
Who's disagreeing with who and why?
Right. Well, that's exactly it. The
So you look at them, and when they say, "Oh, I won't I won't go there," then that's where you should be going. On one hand, and on the other hand, you look to the person that knows better than to take sides, because the resolution hasn't been achieved.
Right.
There's no resolution to the controversy yet.
Yeah. Well, I guess that's when you're going to read, let's say, CNN, and then you consume Fox News or something. Like you have both sides. So
Yeah.
I don't know. I mean,
well, Fox News is they're talking about reporters, anchors for one network or one news people switching to a different one. That's like, oh my gosh.
Well, that's if you're referring to what's her name?
Yeah, what's her name?
The blonde one.
Yeah, the
Kelly.
Went from Fox to CNN.
Yeah, that's purely money.
Well, yeah, but the saying is follow the money.
Yeah, well, that's what I'm doing here.
Yeah, that's what it's about.
That's what I'm doing. I'm following money, but I'm looking for following maximum return money. So I'm doing the same thing.
So what's controversial is what's important if you're trading.
Well, yeah.
On what side and who's going to win and who's going to lose.
True. But when it comes to trading, I mean, it's all here, right?
Yeah.
So
a lot of it's there, that's for sure.
Yeah.
Because the international business is the big business.
Well, it's forex. It's governments rely on forex, and it's what?
I mean, that's what the business is done with is the currency.
Well, it's $4 trillion.
For every buying and selling of goods, there's a buying and selling of currency.
That's right, and we're talking $4 trillion a day.
Yeah.
4 trillion a day.
Yeah, in fact, there's a lot more trading in currency than there is in buying and selling of goods.
Oh, it exceeds it. Yeah, definitely. This is how companies, governments finance themselves. It's through these means. And all we're doing is just trying to get a piece of little tiny action on some price movements between this country and that country. That's essentially all we're doing.
Yeah, we're liquidity providers.
Yeah, in a way.
In the state that we are as speculators.
Well, every citizen who pays taxes is a liquidity provider.
Yeah.
You know what I mean?
Yep.
Yeah.
I'm still wondering what happens when Trump's new jobs all turn into robot jobs and everybody gets laid off again.
Well, that's happening.
I think that what we ought to do in the United States, maybe before China does, is set up an income tax system for robots. You know, if you want to set up a world government, you shouldn't be taxing people. You should be taxing robots.
Well, they're
going to be doing all the production.
That's right. Yeah, but what
we should do is set up the helicopter money from the robot tax
Yeah.
gives everybody a minimal standard of living. They can crawl into a little hexagon and sleep at night, and then they've got a little machine that'll feed them,
Yeah.
and they'll never starve. And if they want to be creative and produce something, then they'll get paid real money.
Well, that's what they do in Switzerland. You get a basic income, guaranteed income. I think
Yeah.
Sweden does the same, and that's that. And you're living off the land of the land.
Yeah, but we're going to be living off robots. Actually now there's the fat tails in the money is that people that invent the robots, they keep too much of the money for themselves. They
Yeah.
should tax it. They shouldn't charge. Let the rich people that build the robots not pay much tax or force them to pay more tax.
Right.
There should be pretty flat tax on people for what they create, and then if they build a better robot, they shouldn't expect to go 100 years with a monopoly on what their robot produces.
Well,
they should, once the robot is paid, they've been paid well for developing the robot and contributing to the world wealth, then the robot tax should pay everybody's minimal living standard.
Well, think of it this way.
Run the government.
Think of it this way, though. You're bringing in robots to make things, but they're making things when people don't have jobs that can't afford to buy things. So it's a big vicious circle. It doesn't make sense.
That's right. So that the next layer is if there's going to be some productivity that's not human. We have productivity from the earth. That's resources.
Yeah.
And we have middlemen that ship the stuff around and discover it and process it and all that. Well, they're really middlemen between Mother Earth and people that consume its bounty.
Right.
And on the other hand, if we build robots, it'll be similar. It's a resource. You get productivity.
Right.
But it's not the same kind of intelligence that humans have.
Yeah.
And it shouldn't be taxed the same way either. It should be taxed for a period of. The benefit of building a better robot should go to its inventor for a while, just like a patent does. But after a while, it should expire, and the robot should be taxed, and it should go to the world kitty that keeps everybody in sneakers.
Yeah.
How's that for a crazy idea?
I could take it. I'm just looking for the company that makes robots. It's something Fuchs something.
Fukushima is where the nuclear power plant.
No, I know that. But
there's a Fukushima robot is the thing that does the cleaning there because it's immune to radiation.
No, but there's a company that it's a big company and they're growing fast. Out of Japan, they begin with an F. I don't know. F.
Fukuda.
Yeah. Is it Fukuda?
It probably starts with an F. Yeah.
Yeah, you might be right. Fukuda. Fukuoka. That might be it.
Fukuoka.
I think that might be.
That's a city.
But there. Oh, I can't remember the name, but I see them all the time.
Look up robotics manufacturers in Japan.
Yeah. Okay. Manufacturing, I guess. Top 25 robotics company in the world. Well, you know what? There's gonna be China will have a company because everything. There's a chart that I showed of all the activity of robots in jobs. China was way up there, so I wouldn't be surprised.
Oh, yeah, they've already announced that they're gonna throw out all their workers and install robots.
Yeah, this is a
company. Already said that right up front.
Yeah, well, they're gonna have problems because it's gonna be now riots.
Is a big robot company. I remember that name.
Yeah, this is the company Fanuc.
Yeah.
Yeah, this is them. That's all they do is make robots, and they're growing like leaps and bounds.
Yeah.
Yeah, these ones I see all the time.
There you go. Yep.
This one, yeah.
Awesome stuff.
Yeah, it's great.
Yeah,
but
what I see is people buy, get a mortgage on their house, and then they get a mortgage for their robot, and then they make stuff, they take care of the robot and care and feed it, and they put their little box out on the front porch every day, and reverse Amazon comes and takes it to wherever it's needed.
Really? Yeah, I never heard of that.
I see that coming in the future.
That makes sense. But what was I going to say?
But I really was over in Taipei, and they took me on a tour of all the people's houses where they made all the little bits of plastic that went into just one of the parts we bought.
Wow. Well,
we drove around on all these little streets, and we went into the chickens were running around on the floor, and
wow.
Mama was in the kitchen, and there was an injection molding machine in the hallway going ka-tunk, and then dropping little bits into a bucket, into a wire basket. And then in another room, there was piles of rice paper, probably a foot-high pile of paper. They probably had thousands of pages in it because the paper's so thin.
Mm-hmm.
And a fax machine and a computer.
Wow.
And that was cottage industry. Really was.
Yeah. Well, the way I look at
the stuff that I was selling was made in 100 different houses.
Wow, because I was surprised. This show, Robot Wars, if you're a fan of UFC or boxing, that this kind of robot wars will eventually take over UFC and boxing instead of real.
Oh, that's interesting. Yeah, I have people in our family that are into robot contests.
Yeah, no, but these are the wars where
MIT
they beat.
always had those for years.
Yeah,
I went to school there, so I see they love to talk about their robot competitions.
Yeah, these are the robots beating up on robots, so I could see this being a big deal. But the reverse manufacturing out of Amazon and the robot thing, that's a big deal because the one thing that I've been seeing a lot of kids get involved are the market. What's it called? Market. It's Intel. It's sponsored by Intel. Market. I can't remember what it's called, but it's market. It's a trend where market. Market. It's like market making. I'm always thinking of market making, but it's basically kids building these little technical things like a little TV.
Well, it's called
Maker market. There you go. Thank you. Yeah, like these are huge in Toronto now. Yeah. These are huge.
Yeah, that's really cool. My son is real interested in being a quote maker unquote.
Yeah. I mean, this is the new.
Of course, little computers, little embedded software devices.
That's right. Yeah, I think it's very cool. This is becoming up and up. And the one thing I like about it is when you get the kids involved and it gets their brains thinking and this is the future of jobs.
Yeah, but I see that as cottage industry.
For now, yeah, but
makers where they live will have a little mini factory.
But don't forget that's how HP, Apple started. We're in garages.
Yep.
And you get kids like this doing the same thing in their home, and then some investor likes what they're doing and puts money into them, and it grows into some. This is the future.
Yep, I agree. I think it is.
Yeah.
And then I see the reverse Amazon where they come, they take a cut from what you do and take care of all the bull crap, the taxes and the shipping and. I passed a truck today.
Yeah.
That said Amazon Prime on the side of it.
Yeah, well, Amazon. I think Amazon's up to 80% of the retail market now. Oh, I know. 80 of everything that's sold online, Amazon has about 80% of the market, and so anything that's shipped comes out of Amazon.
Amazoning.
Yeah, and then.
Amazoning.
But remember, there was Walmart that took over everything years ago. And now Amazon's not putting Walmart out of business, but they are greatly impacting Walmart for sure. just
Yeah, I think Walmart's having some um, paradigm shift pains.
well, they had to take over JD.com to be more competitive with Amazon.
Uh-huh.
That's how impacted they are.
Wow, that's impacted. All right.
Yeah, yeah, yeah. I'm just looking at the
Well,
clock, man.
I tell you that if I want to get a part to fix our stove or our air conditioner or something, I can get it for less than half the price off of Amazon, and I can get it from a place like people locally that will repair an appliance, for example.
Right.
Like put a new motor in your air conditioner or a new bimetal temperature control in your stove or whatever, things that wear out. There was air conditioners. Just about every air conditioner in the country is going to fail because if it has an electrolytic capacitor in it, because the Chinese stole formula from the Japanese that was purposely wrong,
Yeah.
so that the capacitors would fail in 2 years.
Yeah.
I mean, I'm sure you've heard of that flap.
Oh, I'm sure.
Computers were full of these things.
Yeah.
And their motherboards would go out in a year.
Amazing. And that's a big expense too.
And I'm trying to, I usually can think of the name of the capacitor, Nishikon, I think it was, that did that in Japan.
Yeah.
Did that to the Chinese. They actually allowed the wrong formula to be stolen, by somebody that stole the formula and ran off with it to China.
Yeah.
And they made that according to that formula, and it was a disaster.
Yeah. Well, that's
so anyway,
that's
things like that. Pardon me.
Yeah. Well, that's how the U.S. government works too when it comes to government secrets. They'll put out more in.
Yeah, well, one agency or division keeps it secrets from the other divisions. I guess was it. I'm trying to think. There's a company that develops products. I think it was maybe even Hewlett Packard did this, or Tektronix. One of these companies that made instruments.
Yeah.
They set up 2 or 3 teams to develop a product, and once the product has been proposed, then they have a review and pick the best team to finish the project.
Right.
So I don't know exactly how it works inside of our government, but I know that the agencies compete with each other, and then there's overlap and redundancies, and they compete with each other, and then within each agency there's competitive elements too.
Yeah.
So you'll see, like the head of the CIA has to decide which of their people he should promote and which ones he should ignore.
Right. Yeah.
So
well,
without all that compartmentalizing, it's really hard to suss out what they're doing.
Well, they do that as part of their, as I said, their misinformation program.
Yeah, so that not only do they compete with, not only they keep what the United States is doing unknown to our competing countries and states, but also from even one side of the building to the other.
Yeah. Yeah. Yeah.
Or one town to the other, like Langley versus somewhere else nearby.
Right.
Or one supercomputer with all the data looking at it, and another one somewhere else looking at the same data.
Right.
One of them is known, and the other one, nobody knows where it is.
Yeah.
I mean, they say they built this great big building in Utah. I can't believe that that's the only place the data is analyzed or stored.
Well,
Can
I
you
think.
believe that?
No, I think
No.
I think that's part of their misinformation. I think they're just saying, "Oh, we're going to store it here," but they're putting it somewhere else. But you just don't know.
Exactly. I mean, if I was running it, that's what I would do. See, I'm not running it, but anybody with common sense would know that there's more to it than meets
Die?
The eye, yeah.
Yeah, well, it's the same thing with Roswell.
Yeah.
They did that on purpose to have people put the focus on that. Meanwhile, it's a smokescreen so that the government can go on with their research without distraction in other areas of the country, because all the conspiracy theorists are focused on Roswell.
Yeah, well, it's one of the best, the best evaluations of the whole, the book that was his name, Corsi, wrote about the day after Roswell.
Yeah.
He was a guy that worked in our government, and in his book, he writes about how all the governments in the world wanted in on the excitement, and how the government was compartmentalized, competed amongst itself for all the action and fun.
Yeah.
So regardless of what really happened at Roswell, what I saw as truth was the attitudes that people working in the government had toward the whole issue.
Yeah.
What they thought should be, how interested they were in keeping it all a big secret, and how much one side of the government, worked at seeking out the secrets kept by the other side.
Right.
Or other countries too that we were cooperating with and trading information, because they had their own interesting events. And well, let's trade your flying saucer stories, and we'll give you ours.
Well, it's
some of them may be the truth, and some might not be.
Well, I thought the brilliance, if it's true, is what the NSA were not allowed to spy on their own civilians, so they give that duty to the GCQ out of England. So the GCQ starts spying on citizens of the U.S. So the UK had the same problem. So they allowed the NSA to spy on Brits, and then they started the five eye program out of that. So they have maybe Canada watch Australia, and Australia will watch. You know what I mean? Among the 5 countries. I think
really, what's needed is communication. Somebody once asked me, "Don't you think somebody's spying on you from the government?" And I said, "Well, I hope so, because Congress won't listen to me."
Yeah.
I write them a letter, and they send me back a form letter. Oh, thank you very much for your very important opinion. But you just get the feeling they're not listening.
They don't. Well, yeah. Until something happens.
They don't take it seriously. They don't put the data together.
Yeah.
That they're getting from. So the agencies are the people you should be talking to, because at least they'll listen.
Right. It's fascinating, man. But I can't believe this. I've been going like this since 8 o'clock. So, I'm no offense, but I'm gonna get. My eyes are like just shutting down here.
Well, I've got this great big monitor, and it's just in my eyes and keeps me awake. So I have to turn it off, and I'll go to sleep.
Yeah, I'm in the same boat, but I'll get this recorded. It's already recorded. I'll try to get this up tomorrow sometime. And if you want to check out the first hour, it's quite good actually. I was pretty impressed.
Yeah, that would be good.
Yeah, so I'll post this on YouTube tomorrow. But
I don't think you want to post all 4 hours of it.
I've done it before, and I'll do it again.
Okay.
It's not a big deal for me. It's just a recording, and then you just post it. So people, it's up to people if they want to watch it or not.
Sure.
I'm pretty surprised on the number of people that watched this one on the one I just did yesterday on the broker review. I think we're up to about 140 since yesterday. That's not too bad.
Yeah, I actually did watch that, and it was I said, well, I ought to see what Brian's up to on YouTube here.
Yeah.
But I've been so away from with the politics and the election and
sure
moving and other things. I've just sort of let this stuff go a little bit.
It's okay. Well, as you can see here, though, I'm hoping to get. But I'm hoping to get everything running now with Duca's copies. So the next couple of weeks. So as I explained earlier, what I'm intending to do, I think that will be a huge deal for me. So that's basically my first real dip into the market. So we'll see what happens.
Cool.
Yeah. So
I'll be watching.
okay, well, a lot of people do. I appreciate you doing that, good or bad.
And I'm glad I could actually talk with you for once.
Yeah. Well, I'll be around for next week.
It's a different computer. It has a microphone.
Those help. But
Yeah.
but
There's a camera too. I even saw my picture on there. I could turn it on and off.
oh, that'll be interesting. I had a guy. His camera showed up on my screen, and he wasn't wearing anything. So I thought, I don't want to edit this file, and I just posted it on YouTube. I don't think the guy realized what he was doing. It just popped up for about like 10 seconds, and I think he realized that he pressed something wrong. And all I see is his bush. I'm like, oh god.
Well, I've got a buddy that apparently he has connections in the government.
Yeah.
That say that I don't know, some 30% of the bandwidth is people doing selfies of their privates.
I could believe that.
And that, I mean, this is years ago. I don't know if that's the case anymore.
No, I could believe that.
When this whole fad started.
Yeah, I could believe it. It's pretty bad.
And I thought that was pretty mundane.
I bet you a high percentage of the web traffic right now is probably a good chunk of it's porn related for sure. I wouldn't be surprised.
I'm not sure if that's porn or if it's just I don't know what, you know.
Yeah, I don't know.
Selfies of your privates. Oh, look at me. It's like,
yeah.
That's not even the porn industry. When I was at the CES, I was with a guy that was really gregarious, and it struck me that we should try to get into a porn convention. Where they were, and so I don't know. I started doing this, this act that he did, and they let us in.
Really?
For free.
Wow.
And it was so much fun because the whole thing was they're doing it, and it was all for fun.
Wow.
It really was. They had the attitude they had towards what they were doing was nothing that I thought it was.
Right.
Let's put it that way. It was all fun to them. It was not anything but. They were just laughing at everybody.
Right.
Realizing that that most people had no clue as to what was really going on behind the door.
Right.
So I don't have such a dim view of porn anymore, because if you look at what comes out as porn, it's pretty lewd.
Yeah.
But the people that do it, it's a joke to them.
Yeah. Yeah. Well, I don't know what to say.
I was totally surprised by that.
Yeah. Yeah. Well, I don't know.
They take a totally different view. They don't think it's bad. They think that people are stupid, and that if they want to do that, that's their right to do it. But we think it's funny.
Right. Well, hey, what can you do?
Like watching, laughing at cats walk around on their hind legs,
Yeah. Or the stupid cat videos that you see all the time.
Exactly. Yeah, that's like the same phenomenon.
Well, I'm pretty guilty of that stupid stuff, but whatever. I'm not gonna lie. Anyways, I'm gonna knock off here.
Okay.
But it was good talking.
It was fun.
I appreciate you reaching out, man. It was awesome.
Well, thanks.
Oh, no worries. So if you want, I'll be doing the Dukas copy one next week at 8. I think it's 8 o'clock or 7 o'clock, or
okay.
It's on my website.
Well, just keep sending out your little emails so that has the little
The go-to meeting thing.
go to meeting number. So
Yeah.
you just click on it and bingo.
For sure. I'll definitely do that then. But thanks for coming out then, and I'll get this hopefully posted tomorrow.
Okay, great.
Okay, man. Good luck with your move, huh?
All right, thanks, and good night.
All right. Have a good night, man. Thanks again. Take it easy, eh?
Yep.
Okay. Bye.